Good morning, it's 8 a.m. and this is the news on Mira Business FM. These are the headlines. Multiple entry visa applications in the UAE rose by 20 to 30% in April compared to March, and the increase suggests that travelers are choosing more flexible options when planning visits. A multi-entry visa allows visitors to enter and exit the country several times within a set period, and according to the General Directorate of Identity and Foreign Affairs, these visas can be issued for 30 to 60 or 90 days. Travel demand has also picked up. It has recovered to around 30 to 50% of pre-war levels. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve. The rate for short-term borrowing remains 50 basis points above the base rate. And officials say the base rate affects overall monetary policy. It also guides the overnight market interest rolls in the UAE. Gold prices are holding near one-month lows, and pressure is coming from rising oil prices and the ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how the investors view safe haven assets. Gold is under pressure as central banks keep interest rates high. High rates make non-yielding assets less attractive. Crude oil has also been rising. This is increasing the production and transport costs across the country. The link between oil and gold has strengthened in recent months, and this is adding to the volatility in the market. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, your daily guide to the markets, money, and more.
It's the morning drive. It is Mira Business FM. Thank you for the messages this morning. If you are interested in Scale or Fail, our podcast all about how to scale your enterprise. We were talking a little bit earlier to a gentleman who's going to be running Falcons of Majlis, which is a new kind of startup TV show. That is now up online if you want to watch that again, by the way. Thanks for the messages. Next up, SMEs are under pressure from rising costs and uncertain demand. But lots of numbers start with, I guess, the numbers that leaders are not seeing clearly, if that makes sense. Now, on Morning Drive, we often try to uncover the financial blind spots that are holding businesses back at the moment. It's been a lot of the conversation, no less so next up. Zaid Abu Baker is the founder and CEO of Compass Point Consulting, and he's here hopefully to explain where money's slipping through the cracks and what to fix fast. So a fix it fast audit for leaders struggling to see the full picture, and maybe even some ideas on how to plug the leaks. It's kind of what we're going to be doing, Zaid. Welcome. Good to have you here.
Thank you very much for having me.
You're very welcome. So my observation to start with would be this. Business owners in Dubai working harder than ever. It's the nature of things right now. But, cash flows are relatively stagnant, I guess, in lots of cases. The problem often isn't revenue. It's kind of financial fog obscuring where the money is actually going. The thing at the moment is it's just tough times now, isn't it? It's hard.
It is, and I think that it's caught many businesses, particularly founder-led SMEs, unaware.
Yeah.
They are not prepared for what they're facing at the moment. And you mentioned about cash being stagnant. The reason for that is founder-led businesses, SMEs, tend to want to chase revenue. And there is an adrenaline, a buzz that comes from signing new business, from winning new clients, right?
For sure.
And when we look to sort of inwardly towards ourselves, we always try to scratch that entrepreneurial itch to grow our businesses, and it's the top line typically that gives us the most satisfaction. But when you start to dig deep into an organization's financials, what you tend to see in a lot of cases is revenue growth, but profit doesn't keep up. So, for example, you might be growing your top line by 50%,
Right.
but your bottom line grows by 5. And then founders who are excellent at running their businesses from a commercial perspective, being how to sell their service or their product, get surprised when they look at their bank statement 3 months down the line and they see, well, I've got all these sales, I've got all this revenue, but it's not converting to cash. And you mentioned something in your introduction about rising costs. That concept of rising costs coupled with chasing the top line and not having a profit or a margin discipline is what's catching a lot of SMEs out today.
Okay, so what we need to do, and I kind of mentioned this in the introduction as well, is uncover the financial blind spots. Well, let me just ask you that as a question. What are the most common financial blind spots that you're seeing now?
So the first and foremost thing is much of the financial reporting that is available to SMEs is backwards focused, i.e. you're looking in the rear view mirror all the time.
Right.
And there's this notion or perception that, forward forecasting or looking at predictive financial tools that can let you see a little bit further forward are reserved for big businesses. That's not the case. There are tools out there that enable that blind spot to be tackled. And a lot of the time it's sitting down and looking a month, 2 months, 3 months forward. And the biggest piece of advice I give to founders, SME owners that work with Compass Point is put in place cash flow discipline by making sure that you sit down Monday morning, first thing, how much money is in the bank, what's going in, what's going out, and let's do that for the next 3, 4, 5, 6 weeks. So you know where you're going to land. And it's not about looking back. We're actually taking a step to look forwards here and trying to figure out what the problem's going to be, when that problem's going to arise, and then we put in place a mitigation strategy.
Do you know what? I in my mind, I'm thinking one of the things about that advice, and that's great advice, because if you're on top of the money, then you're on top of the business. I mean, clearly that's where you need to be. Why else are you in business? But I would contend that for a lot of founders, it's pretty scary looking at the bank account a lot of the time. I mean, that has to be it, surely.
It is, and it's, I tell this story during new business proposal meetings quite a lot of the time.
Right.
I spent 20 plus years as a finance director, CFO, financial controller, and in corporate. And I would always say that if someone saw me walking down the corridor, they would turn around and run in the other direction. Right? So it was always a case of, let's move in the opposite way to where the finance guy's coming from, because he's going to come and ask me about my expenses or cut this or cut that. And that's the wrong perception in my mind, because what Compass Point, what I've tried to build, what me and my colleagues and my co-founder are trying to build in terms of this organization is a business partner. You don't have to be afraid of the numbers. You just have to be willing to sit down and look at it. Because yes, it can be intimidating, and yes, there is some fear and some trepidation that people sort of approach their financials with. But we can unpick that. We can figure it out.
Well, we can. Do you know what? Actually, last week we had the CFO of our whole company on. I
saw it.
Yeah, and I just thought, how am I going to approach this interview? So I was just really nice to him. Because he signs the checks, obviously. But I understand that. But part of this is that kind of sentiment and that kind of mindset, isn't it? I mean, we talk to a lot of business owners on Mira Business FM, right? And they'll say the business is profitable, and yet at the end of the month they're stressed about payroll. Profitable on the P&L and broken the bank kind of thing. What is it that? Why do people not take the advice? Why do so many businesses struggle with cash flow, despite the fact that revenues are often pretty steady?
So in the GCC, there is a tendency for businesses to struggle with receiving payments. One of the biggest challenges that we face here is that most companies that you deal with will want to pay you based on terms. And that could be 30 days, 60 days,
90,
and now we're seeing 90, and then 90 becomes 100, and 100 becomes 120, and so on. And they don't really know how to deal with it. And I tell you, what I see most often is the founder, the CEO, the principal, doesn't want to have that conversation with the client because they feel like having a tough conversation with the client is going to damage the relationship, is going to, the client may turn around and say, hey, you know what? Not happy with getting paid on 90 days? I'll find someone who is.
Yeah, okay.
And that, if I kind of call it a sort of a division between the management of a relationship with a client versus what a finance person or a fractional CFO should be doing, is taking that off your plate and allowing you to run your business. And it's almost a little bit of good cop, bad cop.
Yeah, okay.
And I think that that's something I get asked to do quite a lot, is go make a nuisance of yourself, Zaid. Go try and get this debt collected. And I'm happy to do that because that's my role.
How do you approach that then? When you go and sit with a client who is maybe difficult, extending the credit terms beyond what's reasonable, because that person may have the same problem.
Yes. And I think that you have to cater your strategy depending on who's across the table from you. If you're dealing with a multinational corporate that has a policy internally which says we just pay people on terms, 60 days, 90 days, and you'll get paid, there's often not a lot you can do about it, because if you want to do business with that big MNC, that's the cost of doing business.
Right.
But if you're working with independent businesses, there is a way to try and negotiate. So could I give you 5% off if you pay me within 15 days? Could that be an early settlement discount? What about if you pay me 50% in advance and 50% when you're happy on completion? That helps my cash flow and it helps you because you're not fully committed to the cost before you've seen what I can deliver. When it's government clients, that's a totally different strategy that has to be employed, particularly the government clients in Saudi Arabia, where they are somewhat handcuffed by internal procurement laws, where you have to navigate through many, many portals and procurement legislation and try to get sort of things ticked off all the way. And this, again, is something that founders, SME owners get really excited. They say, oh, Ministry of ABC is going to give me $1 million dirham contract or $1 million Saudi Riyal contract. Wow, amazing. But 6 months later, haven't been paid. And the reason they haven't been paid isn't because the ministry doesn't want to pay them. It's because they haven't followed the process. They haven't done the registrations. They haven't gone through the actual mechanics of what's required.
Procurement portals are pretty hard to navigate, let's be honest.
Yeah, you need to know what you're doing.
You really do, yeah. I have to admit, I've struggled with one a lot recently. It's pretty tough. Okay, but it is how you approach it, and there are ways that you can offer. You can kind of incentivize, is basically what you're saying. If it, not through portals, but when you're, credit control is a really tough aspect of business, but incentivization is one way of doing it.
I think so, and I think the other way of doing it is making sure that you have good relationships.
Yeah.
We're in a people-oriented environment where people are doing business with people. So if you are taking on a new client, one of the things I always advocate for is have a client onboarding form. And on that form, make sure that you've asked, who is my finance contact? Who is my payables contact? And get in touch with that person at the outset. Hi, this is me. I'm going to be sending you an invoice on a monthly basis. If there are challenges, please get in touch with me. And you have a counterparty to then go to. Much of the time what happens is you rush, you onboard business, get to the end of the month. Oh, I don't even have the tax registration number. I don't even know what their VAT number is. Oh, now I'm 5 days delayed with sending them an invoice. Who do I send the invoice to? It's just about having a little bit of upfront discipline in collecting information and making sure that when you have completed your work, you know who to send that invoice to as well.
And the other side is, as well, I suppose, you have procedures in place, you have processes in place, you have it's almost an attitude, isn't it, to business? That's a real bonus, I guess. If an SME owner has, say, a 10% leak in their margins, Zaid, where is it usually hiding? Is it in procurement? Is it unoptimized payroll? Is it dead inventory?
So quite often it's sitting in a lack of understanding of where profit's coming from. So what I mean by that is I notice quite a lot businesses have many streams to their revenue. So they could have several products, several services, different variations of those services or products, and they bundle everything together as one line called revenue and one line called profit. But if I don't know which ones of those services are making me 30% margin and which ones of those are at minus 5% margin, I'm unable to then pick out which of my customers are profitable and which ones are loss-making. And that's really where the biggest leaks come, particularly in service-led businesses. Service-led businesses, what tends to happen is a concept that I refer to as over-servicing. So you bring on a client who's paying you, for argument's sake, 1,000, but you're actually delivering to them 2,000 worth of service repeatedly month over month over month. And then you look at your bottom line and you're wondering where my margin leak is. Well, my margin leak is because I'm having to pay somebody to over-service them. Or I'm having to pay to bring in a product via air freight to get it to my end customer, and it's eroding my margin, but I'm not really seeing that because I can't see the different components of what it takes to deliver that service or that product. So that is where I see a lot of SME type businesses struggle. It's just a lack of knowing where the profit and loss is coming from.
You've got to have a view on everything in your business, haven't you? You've really got to have control. I mean, one of the things I wanted to ask you this morning is it's really all about that and knowing where you're going. Because if you're weak from a forecasting perspective, that's going to show up in day-to-day operations and affect decision making, isn't it?
It has to, 100%. And again, I think that this comes down to the attitude that you take towards running your business. So there are some that will say, okay, it's November 2026. I'm now going to budget for 2027. I'm going to spend 3 weeks doing a budget, and then that's the end of the story. That's my forecast and budget done. Those types of businesses, if you imagine someone that did that in November of 25, by the time they've got to March of 2026, it's all out the window. There are those assumptions that they are making decisions on are no longer valid. So the best way to try and get forecasting to help you run your business, in my opinion, is to have it done on a rolling 12-month basis. So you're not looking at calendar year, you're always looking 12 months into the future. And it sounds like a really hard thing to do, but it's not, because once you get into that rhythm where, okay, we're on today towards the end of April, we'll close our April books, we'll now look at a forecast from May to April 2027. Then you do it the next month and the next month. And once you're in that rhythm and it takes you half an hour to update it if you have the right tools in place, you're then making data-driven decisions every month because you're up to date and you're live and you're taking into consideration what's happening around you, as opposed to, well, you know, I made that assumption in 7 months ago and now I'm still trying to run my business based on that assumption. It's never going to pan out for you.
Yeah, so you get your head out of the sand.
Indeed.
Yes, okay. That was very politely put. Look, we all have, in our daily lives, we've all got subscriptions or software or retainer fees, whatever it is that we've forgotten about. You know, that's normal. That's just a part of kind of modern day convenience living, I suppose. It's the same in business, isn't it? How do you advise a CEO to conduct an audit of their expenses, a zombie audit perhaps, without disrupting operations?
I actually, probably an unpopular view, but what I did, and it's a real life example, is we took the bank statement of a business that's turning over 15, 16 million dirhams a year. And everything is linked to the CEO's credit card, personal HSBC card, that gets debited for every subscription that you could possibly imagine, on a monthly basis. And we tried for a couple of months to get some focus on this. And in the end, I said, look, I'm going to take an action here. You may not like it, but actually, I think this is going to help you. And we got his PA to call up HSBC and cancel the card. So every direct debit, every standing order that was sitting on that card was then going to bounce. And I said, if anyone screams that their subscription got switched off, we'll relife it, we'll put it back on because we know it's being used. And for all the other ones, you'll know that no one was using them anyway.
Okay.
And it saved $56,000 a year in expenses, in random subscriptions for all sorts of things that were not needed.
Like what kinds of things?
So things like a subscription tool that checks people's grammar on an email before it gets sent, subscription tools for social monitoring and sentiment analysis, subscriptions for premium tools for video editing when they were not doing any video work, all sorts of stuff, just randomly sitting there. And
So no screams in that office?
Well, there were a few.
Or fewer.
Fewer.
Than you.
Yeah, fewer. And the ones that got put back on were the ones that you would expect people to ask for. Oh, my ChatGPT Pro stopped working. All right, we'll put it back on. This stopped working. Right, we'll put it back on.
Right.
But sometimes it's just as simple as somebody coming in with a third-party view. And as a fractional CFO, the benefit that I have is, I don't need to be friends with anybody at the end of the day because I'm a fractional CFO. I can go into that business. I can say to everybody, my role here is as an independent. I am here to do a job, and I don't need to get involved in office politics and anything to do with the ins and outs of how things run on a day-to-day basis. I'm just simply here to do this particular task and go in and do that. Sometimes that actually builds a better relationship because they're like, oh, this guy's really interested in doing the right thing for our business. He's not just here to consult and advise. He's actually here to do something and action it. So you end up kind of getting a positive impact from taking, sometimes a meaningful step.
See, that's interesting. That's kind of counterintuitive, but I see what you mean. Okay. So that's $56,000 a year. That's a major saving.
Indeed.
That's certainly a salary or two, or it's a huge amount of money, based on real data as well. So if you walk into a struggling SME today, what's the first thing you ask? What's the first piece of data you would ask to see? Is there one metric that tells you more about the business's health than any other?
I actually take a slightly different approach.
Okay.
What I've learned over the course of the last couple of years is doing a big investment in the pre-engagement phase with any client pays off in spades. So the first thing I would do is sit down with the most senior person, whether that's the CEO or the founder or shareholder, and I would just hear them out. What is keeping you awake at night? Where are you struggling? Now, don't tell me about your life story, tell me about the numbers and the financials, but where is it that it hurts? What's the challenge? And we then go in and do something called, for lack of a better expression, a diagnostic. It's simply, okay, you told me that these 3 or 4 things are really problematic. So I'll give you another example. I sat with a founder of a business last week, and they said to me, the biggest thing keeping me awake at night, biggest challenge is I don't know where everything that I'm purchasing in terms of inventory is going. There are gaps in the system. And so our first port of call in that case would be, all right, you have an ERP, you have a barcoding system here. Where's the gap? What's the leak? To use your expression. So we would always listen to the founder, listen to the CEO, and then try to identify where we can help. Because in our line of work, you've got to go in fast and hard and make a difference. And when a founder or a CEO or a business owner can see that you've gone in and immediately been able to make an impact and solve a problem, you go to the next one and the next one. And that typically is what we look for. And it's no single KPI or no single metric. It depends business to business. But you hit on it first up this morning. The majority of the challenges we see right now is cash.
Yeah, well, it just seems. I mean, we talked to a lot of people, and that's kind of been. It's almost a mantra at the moment, you know. Lots of founders try to be their own CFO, and naturally, that's the case. I know I see the raised eyebrows until you get to like a certain size,
Yeah.
right?
Yeah.
So, at what point does doing it yourself start costing you more in opportunity cost than hiring, you know, the right person for that role, an expert?
I'm very biased in that opinion.
Yeah, you should be.
So I would say you should never be your own CFO, because if your skill set is being charismatic, visionary, coming up with new ideas, services, building relationships, networking, selling, go do that. Why spend your time worrying about the numbers? Give that to somebody else to do, because immediately there's an opportunity cost. And that's something that I say, or see rather, a lot. It's, right, I'm going to spend X number of hours doing financial related things. But that's at the cost of going and pitching some business, or going and doing something more value additive that you can do in the business. So I would say almost immediately. But if you're asking for specific size and scale, what I see today is any business that's doing somewhere between about 1.5 million, 2 million dirhams in turnover, up to about 30 or 40 million in turnover, is not in need of a full-time CFO, because the business isn't at the scale. So a fractional CFO would work for you. Once you start to tip that and you go sort of over that 40 million dirham mark, $10 million mark, you're typically going to have 30, 40 employees. At that point, you probably start to think about, well, maybe I need a full-time in-house option. But our clients are sometimes a bit bigger than that as well, and the fractional model still works for them. It all depends on the nature of the business. But I would say, don't play to your strengths. You know, do the things where you can add the most value to the business. And if financials and numbers and forecasting and budgeting isn't your bag, you don't enjoy that stuff, you don't like it, let someone else get it done for you.
It's all good common sense stuff. We're a little bit short on time. Actually, we're running slightly over time. I'm going to push it a little bit. I wanted to ask you a couple of questions just before the news.
Sure.
Looking ahead, what financial habits are going to separate, this is the word of the moment, resilient SMEs from those that may struggle?
So I think the ones that will do best, and I sort of add to this that I've been in the UAE a very long time. I've seen it bounce several times over, and I have no reason to believe it won't do so again. But the businesses that will be resilient enough to take advantage of that bounce are those that practice data-driven discipline. Because if you are a founder that's making decisions and you're like, well, I feel like that's the right decision, instinctively I think that's the right answer, it's not going to work. Because you have to have the information at hand to make the best decision available. And if you're data-driven, disciplined about the way that you operate, you're going to end up doing better than the person who doesn't.
The last thing, and I want to squeeze this in quickly, they're all looking at me now because I know I need to go to the news, but I came across this quotation online, and it's attributed to you, and I really liked it, and I wanted to mention it this morning. I don't know if you said it or not, but you can confirm or deny.
Okay.
Most SMEs don't fail because they have a bad product. They fail because they have a leaky bucket.
Yep.
Is that you? This is you.
It is.
And I really like the bucket analogy. I just wanted you to finish that off, if you would.
Sure. So I think that the place it came from was people spend so much time trying to pour water and fill up their bucket with new business.
Yeah.
Prospects, leads, top of the sales funnel, as much as they can do in terms of generation of new business.
Good morning, it's 8:30 a.m. and this is the news on Mira Business FM. These are the headlines. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve, and the rate for short-term borrowing remains 50 basis points above the base rate. Officials say the base rate reflects overall monetary policy, and it also guides overnight market interest rates in the UAE. Emirates NBD has successfully priced a $750 million additional Tier 1 bond. It marks the first major debt issuance from a GCC institution since late February 2026. The deal saw strong global demand. Investors came from Asia, Europe, the UK, and the Middle East. The issuance was more than 3 times oversubscribed, and this reflects a strong confidence in the bank and the wider UAE financial market. U.S. President Donald Trump is stepping up pressure on Germany over its stance on Iran. At the same time, Russian President Vladimir Putin is calling for restraint in talks with Washington. And the U.S. is now considering extending its blockade of Iranian ports. This comes as tensions remain elevated. The conflict is estimated to have cost nearly $25 billion so far. Meanwhile, oil prices are climbing amid growing concerns of wider disruption across the region. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
It's the morning drive. It's Mira Business FM. Good morning to you. Pressure is building in Gulf markets, and that's as conflict tightens financial conditions, pushing up borrowing costs and shaking investor confidence. From Bahrain's rising debt to stress in Dubai real estate. Now, last Friday saw the release of the latest piece of research from Oxford Economics, and it's a research briefing for the GCC titled Tighter Financial Conditions Expose Fragilities. It's a report that considers the impact essentially of the conflict across the GCC economies, and the author is the head of GCC macroeconomic analysis at Oxford Economics. Azad Zangana is with me in the studio. Good to see you.
Thank you. Good to see you.
Very good to have you here, Azad. So this new briefing came out at the end of last week. Can I start broadly? And I suppose regionally, we have seen market volatility across the Gulf following the conflict. We've seen and are continuing to see supply chain disruption. The blockade remains in place. So the financial conditions are certainly tighter in the GCC. How would you characterize the economic pulse of the region right now?
Well, I mean, this is why we decided to focus on financial markets in this report, because in reality, we've probably had about a handful of real data points so far for the GCC. And because of that, it's really difficult to gauge exactly how serious the situation is. Now, for example, we know that Qatar has just gone into its first trade deficit ever in March because it pretty much didn't export any oil and gas in that month.
Yeah.
So very few data points available so far. But what financial markets are telling us is that there's clearly stress in the system, and there are some areas much more stressed than others, but there's no panic. There is a repricing of risk, but we're certainly not looking at like a Euro-style crisis or anything along those lines.
It certainly feels that way. I mean, if you can gauge an atmosphere or put an atmosphere into context, it doesn't feel like that. How much of the current stress that you talk about, financial stress, is directly linked to the conflict versus maybe any underlying more structural issues?
I think what is important to understand is that it's usually these kind of shocks that expose any structural problems that are there to begin with.
Yeah.
You know, if you were to ask me to run a marathon, you'll know that structurally I'm not built to do that. And so I will really struggle.
I'm in the club with you on that one.
Exactly. So this is the issue. And this is why, international organizations like the IMF exist. They're there to make sure that the structure of economies and public finances and so on are in good stead so that when these shocks come about, they can withstand them, reasonably well.
We're seeing capital outflows. I think bond spreads are wider. How serious is the cycle that we're seeing at the moment? Because it's a tightening cycle for economies in the region.
I don't think it's too serious for government sectors and government borrowing, largely because, of course, this is a very wealthy part of the world, and if they really wanted to, they wouldn't really need to borrow much money. Bahrain is the exception, of course. They are highly indebted, one of the most indebted countries in the world, actually. But they are backed by, good growth, some, energy exports as well, which help support the situation, and of course, quite a wealthy neighbors as well that will step in and help them, as they have done recently, once again. So there's some concerns around that, but I would say more generally that most of the tightening has been felt on the corporate side. So corporate bond spreads, sukuks as well, and of course equity markets have really taken their hit so far.
You've highlighted Bahrain as a specific area of concern in the report. There's a section there dedicated to Bahrain. What is it about the situation in Bahrain that makes it so different from the neighbours around the GCC?
So a genuine need to borrow money. Their debt is at about 130% of GDP now, and they have to manage their finances as best as they can. If suddenly the international markets closed to them, they would be facing some kind of restructuring or default, essentially, very quickly. So it's very important for them to manage the relationship with their investors to make sure that they can continue to roll their debt on. That's the nature of any highly indebted country.
It's so interesting, the management of relationships in all of this and the impact of sentiment and confidence. I want to come back and talk to you a little bit about confidence, actually. That comes up a couple of times in the report. How concerned should markets be about maybe spillover risks from Bahrain then? Is that a concern?
Not for other sovereign markets. Like I said, I think the other GCC nations are just heads and shoulders above Bahrain when it comes to sovereign wealth and indebtedness in general. But the spread and the spillover to corporate markets is quite significant, especially within Bahrain itself. The sovereign market, your government bond, is meant to be your benchmark financing tool for a country. So usually corporate debt is priced over and above that. So if a problem starts within the sovereign, it quickly spills into the corporate, as we've seen, like I said, in the past Eurozone crises that we've had in the past. Now, that's probably not the case totally across Bahrain. I'm sure there are a number of corporates that are actually rated quite a lot higher than the sovereign is. But you can see it coming through in, like I said, in equity markets where you're less protected than you are in the bond market. In the bond market, if a company gets itself into financial difficulties or if it's going under, bonds sit higher in the hierarchy of the capital structure. So essentially, you're compensated first before everybody else, and then the equity guys are usually the losers at the end of the day because they are part owners of the company.
Sure.
Bondholders are creditors, and therefore they're paid first.
And therefore, the markets are far more exposed. Bond markets have recovered some ground since the ceasefire. Is that resilience? Is that the signal, or is it just a temporary relief? How do you gauge it?
It really depends on how the ceasefire goes. I mean, we can clearly see that the reaction has come on the back of the ceasefire and the halting of hostilities for the time being. If it was to restart, we'll have to see how the markets react. If they decide, actually, we'll carry on rallying, S&P 500 hitting new highs, then clearly a lot of the concerns are gone, or they believe that the risk of the current situation going forward is priced in. I'm not convinced that's the case for the region, though. I think if the ceasefire was to break down and hostilities was to escalate, we would get another leg down in a lot of these markets.
Corporate borrowing costs, according to your report, they remain elevated, particularly for Islamic bonds, high-yield sukuk. What does that mean for investment, and what does that mean for growth?
So it should mean that the cost of borrowing essentially has risen for these kind of companies. Both the investment grade and the high yield companies has gone up. Now, as any business out there needs to plan for its capital expenditure, for what it wants to do in the future, if the cost of expansion or even just replenishment, any kind of capital investment really, goes up, then you're going to think twice about whether you want to do it, how much you want to do, whether you want to delay it as well. And of course, this region really has grown quite strongly on the back of capital investment and that kind of activity, construction, for example. Yeah. So those cost increases will have a material impact in terms of whether companies want to invest, and therefore it will hit growth in the future.
Broad and regional, to start with. I wanted to come back to where we are in the UAE, of course. Markets diverging is a point that you make in the report, Abu Dhabi and Dubai. But I wanted to take Dubai specifically. And as you point out, here's the quote. Dubai is far less endowed with oil and gas, mainly relies on travel, tourism, financial services, and healthcare as its main sources of growth. That's a given. Plus, your report also suggests, as we are all well aware, that the real estate sector is a major pressure point as well.
It's the biggest part of the index. It's more than half of the Dubai General Financial Index. And so naturally, the outlook for the real estate is going to have a very big impact, an outsized impact on the performance of the market overall. And we can see that real estate stocks as a sector, although predominantly it's one company, I think we all know who that is. Yeah, it's down 24% at the moment since the start of the crisis. Now, that's very big, but probably about right when you think about the risks that potentially could play out in the future. So it's dragging down on the index overall. But I mean, apart from the consumer discretionary index and materials as well, everything is down. All the other sectors are down. Yeah. So there's a lot of risk that's within the system. You know, financials are down more than 10%, industrials are down, utilities are down, even consumer staples, which in theory should be one of the better areas. Actually, that's down materially as well.
Do you know what's interesting about this? We were talking off air before we came into the studio, is I think I just kind of said to you, look, the report wasn't as doom and gloom as I'd half expected. And it seemed, correct me if I'm wrong, but it seems as though it is the way you would expect, and therefore not as negative as it could be. Almost, in some ways, a more positive outlook. Does that make any sense? I know I'm kind of contradicting myself in the question.
Yeah, I mean, what we're saying in the report is that, you know, the structural issues that we've always known about are showing up, because obviously we've had this tightening in markets. And in a sense, what's happening is exactly what we kind of expected to happen. We expected liquidity to tighten. We expected capital withdrawals. And, you know, the central bank, especially of the UAE, has stepped in and provided liquidity. We would expect that to happen. And that's good news, I think, because it shows that policymakers are paying attention to what's going on. And we haven't had an accident or anything along those lines. Whereas in past crises, not just in the region, but around the world, that hasn't always been the case. You know, people have pointed to problems and solutions were not found in time, and markets had to correct very aggressively in order to reflect that risk.
It's very much how the report reads. Back to real estate just quickly, and I wanted to mention this. There are signs of stress in developer debt, rising spreads. Do you think those are early signals of a deeper correction than perhaps was already being pointed to by some observers?
No, I think what's happening within those debt markets in particular just highlight the concerns for those particular developers. I don't think it necessarily reflects on the wider market. Obviously, there are a number of construction companies within the market itself, and you shouldn't treat them all equally. That's always very important. And often, actually, markets get it wrong, and that's exactly what they do. But you shouldn't. You need to look at the fundamentals of each individual company and see how much debt it has, how much leverage there is, what's going on with their pipelines of their projects, and so on, before you begin to sort of understand actually what is the correct sort of default risk that there is. But there was a point in time, especially in March, where there was quite a lot of panic, and suddenly there was a 1 in 3 chance of a number of large construction development companies going bust, according to the debt markets. I think once investors really took a closer look, they realized actually it's nowhere near that high, and they piled back in, and suddenly those costs and spreads came back down again.
There's a great deal that depends on return of foreign demand, though, isn't there? Because of the amount of supply that's coming on stream, I guess.
Yeah, the entire market is really built on foreign demand and expat demand. I think probably you can throw in there as well. So what this war has done is it's led to some very big questions. And I was saying this to you earlier. The biggest question we're getting right now at Oxford Economics is what happens if the expats leave and they don't come back?
Yeah.
What happens if the glitz and glamour that attracts everybody here just doesn't work anymore? And if you don't get that steady stream of migrants coming to the country, then where does that leave the property developers that are, about to deliver tens of thousands of new properties to the market? And where's the demand going to come from? And that's going to be the big challenge for them. What do they do if we even get a slowdown in the number of people coming in? How do they market it to maybe the Emirati community to encourage them to invest in these properties instead of the expats there?
I guess the attraction is to GCC investors as well, but it is limited, isn't it?
It is. There's only so much they can buy at the end of the day. The supply was very much geared to a big growth in migration.
Here in the UAE, the central bank has been very active recently. We're all reading the stories, stepping in with liquidity injections, if you like. What triggered the intervention, and how effective are the measures that the central bank is taking in stabilizing the system?
So at the end of March, they announced quite a big injection of liquidity, which was backed by about 1 trillion dirham worth of assets. And we can see that came in very quickly and helped boost the money supply within the UAE. Essentially, the central bank's job is to speak to the banks on a daily basis to understand, do they have enough liquidity? Is there enough cash in the system? Can they operate and function normally? And the answer came back was, actually, there was quite a lot of liquidity leaving the system. We had about 8% of what we call broad money, the total money supply within the economy, leave within the first 30 days. Now, that's unsustainable. That couldn't continue at that pace for that time. And I think that's what helped prompt that first injection of liquidity, helped lift things back up. But, since then, actually, the liquidity has been falling again. So maybe there's going to be potentially further injections at some point in time. That, and when you look at the spread between what the central bank offers in terms of liquidity and what the banks are lending to each other, that's also risen. Now, in the past, if you think back to the global financial crisis days, that was a classic sign that banks wouldn't trust each other to lend to each other, even on an overnight basis.
Right, got you.
Now, it's nowhere near that severe here.
No.
But it has risen. That is a sign of stress. That is a sign that there's less liquidity available for the banks to lend to each other so that the market can clear every night. And so that liquidity is important from the central bank. And I have no doubt that they're going to do that once again.
Okay. It's a natural effect, though, isn't it? If you're not sure if the money's there, the awareness is heightened. Let's put it that way, I suppose. Money supply contraction, capital withdrawals have raised concerns. Is this a liquidity thing or is it a confidence thing?
No, I think it's more of a liquidity issue. The problem is that a liquidity issue can quickly develop into a confidence problem.
Right.
And that's what you want to cut off very early on. If you see a liquidity issue, quickly go in and fix it as best as you can. And that then gets rid of any risk that a confidence problem escalates into something that becomes unsustainable. You know, we are not in a free-flowing capital economy. We have a peg against the US dollar, and that means that those flows have to be managed. And this is why we're getting stories about potentially the UAE requesting a credit swap line with the United States for dollar liquidity. Because there is a risk, and I'm not expecting this to happen at all, but there is a risk that if markets decide that the dirham needs to depeg against the dollar, it can attack it. You know, we're both from the UK. We both remember what happened there with the exchange rate in the past. So it can happen. And what's important is to get that liquidity in place, get those credit swap lines agreed, even if you never use them.
Yeah.
Put it in place so that actually there's no point for investors to try to attack the peg because they'll lose, because that liquidity will be there. So that's why the liquidity is so important.
I wanted to point to confidence a little bit because, you know, the almost ethereal nature of confidence. The GCC has very strong reserves. I think that's a reasonable statement. Investor sentiment naturally at the moment is more fragile than it was 50 or 56 days ago. What does it take to, and this is me asking you to speculate wildly or widely, I suppose, Azad, what does it take to restore confidence?
I don't think confidence has been that badly hit overall.
That's good to hear.
There's been a repricing. You know,
Right.
I think at the end of the day, is the region more risky? Yes. Therefore, should yields be a little bit higher? Probably yes. So I don't think there's an issue around that, you know, at all. I think if we had a confidence problem at this point in time, things would be a lot worse in terms of everyday life and what financial markets would be telling us.
Sure.
So just keep talking to the markets, keep talking to investors, make sure there's plenty of liquidity available when required, and I don't think there'll be a problem with confidence.
How exposed are regional banking systems, given rapid growth in private credit, particularly linked to real estate, do you think?
There's a fair bit of exposure. There has been a very large increase in credit growth, private credit growth in particular, across the region, but the UAE does stand out quite a bit in terms of our risk tools that we monitor. Actually, it scores the highest risk score possible, 10 out of 10 in terms of risk, because of that very big growth in credit provision. Now, we know where a lot of that has gone to. It's gone to the residential real estate market. It's individuals borrowing either through credit cards or more so in mortgages in order to purchase those properties. So what we're saying in the report is, you know, if there is any concern around the banking system, and I should stress that the overall score for the system is actually reasonably low, but where it is acute is the amount of credit that has been provided in recent years. So if there is a risk around real estate, there's a very big downturn, then you will start to see an increase in defaults, an increase in the number of late payments on mortgages and so on, which then could create some stress for the banking system. And again, we have to make sure that those banks have enough credit available, which they do, to withstand a shock.
We've got a minute left. I had about 3 or 4 more questions. I'll try and condense the questions. So confidence, not the issue that it could have been, which is good. But you know, the uncertainty that we're in is of concern, I guess, still, because you know it's very, very hard to plan. But all that said, this feels distinctly unlike 2008 to me. Or 2008, 2009. Am I being too positive there? Am I missing something?
No, I think that's about right. You know, in 2008, 2009, we had a genuine big liquidity problem here. And it didn't start it. It started in other parts of the world, but it quickly fed into this region at a time when actually the banking system wasn't very well capitalized, at a time when there was a lot of excess leverage within the system as well. And I do believe that policymakers learned a lot of lessons from that previous crisis and have managed to strengthen the buffers here for future events, as we're probably experiencing right now.
Final point in the report was this, and it's just this one line that I pulled out here. Investors expect GCC partners to pull together in times of stress, to support one another, in other words. And I wonder if, again, I'm being naive or lacking foresight, but it seems to me there is a feeling of camaraderie almost, a sense of pulling together in the face of adversity, more than perhaps we've seen in the past. Am I reading this wrong? It feels like the report puts that forward.
These are unprecedented times for the region.
It is that unprecedented times.
Exactly.
Isn't it? Yeah.
And so it's very hard to compare it to the past, but it's good to see that leaders are pulling together and supporting one another.
Azad Zangana is the head of GCC Macroeconomic Analysis at Oxford Economics. I always enjoy talking to you, Azad. Thank you for coming in.
Thank you.
Appreciate it. This is Mira Business FM.
Mira Business FM, your daily guide to the markets, money, and more.
Good morning, it's 9 a.m. and this is the news on Mira Business FM. These are the headlines. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve. The rate for short-term borrowing remains 50 basis points above its base rate. Officials say the base rate reflects overall monetary policy. It also guides overnight market interest rates in the UAE. Gold prices are holding near one-month lows. Pressures are coming from rising oil prices and the ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how investors view safe haven assets. Gold is under pressure as central banks keep interest rates high, and higher rates make non-yielding assets less attractive. Brent crude oil has also been rising, and this is increasing production and transport costs across the economy. The link between oil and gold has strengthened in recent months, and this is adding to the volatility in the market. U.S. President Donald Trump is stepping up pressure on Germany over its stance on Iran, and at the same time, Russian President Vladimir Putin is calling for restraint in talks with Washington. The U.S. is now considering extending its blockade of Iranian ports, and this comes as tensions remain elevated. The conflict is estimated to have cost nearly $25 billion so far. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
This is the morning drive. It's Mira Business FM. Running a small business in Dubai is tough. It's particularly tough at the moment, but there is support in the right communities. From connections to real opportunities, they are essential networks. So, Katie Keenan is the CEO of BCCD, and that's the British Chamber of Commerce Dubai. And she's here to talk about how groups like hers are helping SMEs stay afloat and grow. It's good to meet you.
Thank you. Thanks for having me on.
You're very welcome. It's good to have you here. Let's get rid of a couple of notions to start with. A Chamber of Commerce used to be kind of a quite formal luncheon type place, swapping the business cards, shaking hands. 2026, it's not really that anymore, is it? It's kind of shifted. It's almost more, and at the moment, I suppose this is particularly true, it's more of a crisis response tool, isn't it?
Well, it's all things to all people.
Right.
I mean, everything you've said is covered. So as a chamber, those that have been in Dubai for long enough will remember the BBG. So we started as the British Business Group, working very closely with the British Embassy and the Department for Business and Trade. We're actually based on the embassy and have a very, very strong relationship. So we're a membership organisation, been in existence now for 39 years. And through that time, through various changes of boards and business teams, chairpersons, the flavour and the nature of what we provide has changed slightly. But in the fundamental is that we support businesses that are British, that support British brands. Largely, 60% of our membership are actually owner-managed businesses.
Okay.
But we also have in our membership universities, chartered institutes, the banks, accountancy firms, law firms, construction companies. It's
pretty wide, isn't it?
It's 29 sectors, so I'm a very proud generalist.
Okay. Well, that's good, because that's the only way I can do this job, to be honest. Is it just British firms? How does the membership work?
So we're very reflective of the amazing culture that we have here in Dubai. So predominantly there must be a British nexus. So either that's your British passport, or you're educated in the UK, or you're supporting British brands. Okay,
I'm with you. So how does the diversity of your membership, and it is pretty broad if you've got 29 particular areas, how does that help businesses here? Do you get kind of cross-pollination between, I don't know, a UK-based tech startup maybe who can help a logistics firm if there's a supply chain, that kind of thing.
Absolutely.
Yeah.
With a full ecosystem.
Yeah.
So majority of our members are based here already in the UAE. Some of our members have been here for 40 years and have been members for almost that entire length of time because they see this as an opportunity for building their network, which is their net worth. So they have their chosen partners, but also where the opportunity is where you've got UK companies coming through either from their local British chambers in the UK or anywhere else around the world. They come to Dubai, they come to Abu Dhabi, they come to Ras Al Khaimah, and they're on a trade mission and they're wanting to meet, the local company set up, a lawyer, someone to advise them on what school to go to. So throughout the year, we actually host over 80 events throughout the year. So that can be 2 or 3 a week. And the format of those are, as I said, kind of to please everybody, anything from informal networking at a breakfast, an evening, because obviously some people prefer the mornings to the evenings. And then we also have business briefings, which can attract about 150 senior delegates. And that will be focused on it could be the construction sector, it could be changes in the employment law, it could be healthcare, could be education, and a lot on well-being, because a lot of our annual partners are actually focused in the healthcare sector.
Okay. I just went to my notes there because I liked network is net worth. So I'm going to steal that, if you don't mind.
Please.
In the future. What are the benefits of an association like BCCD? If I'm a bakery or a consultancy, how does being part of an organisation like this help me? I mean, particularly, I'm thinking about now because times are tough at the moment.
So something that I'm extremely proud of, and we have an incredible business team that really gets to know everybody in the membership.
Yeah.
So it's almost like a secret sales team. So through the onboarding process, a company that registers their interest, they'll speak to one of the membership managers and they'll straight away be kind of locked into this Rolodeck of contacts. So a company could come to us to say, we don't even know where to start. And straight away through that individualization, we can work out, you need to speak to this person, you're a good fit for that company, or have you considered that you might need cybersecurity, local advice rather than using your UK partner. So it's this full suite of a proposition that we provide, but we're built very much on reciprocity. So the most active, most successful members are those that come to a networking event, not for what's in it for me, but actually how can I help somebody else?
Yeah,
and that's, personally, I'm a serial connector. I really love connecting people. And that's really the culture that we've been able to grow within the British Chamber.
It's a really useful thing, isn't it? So it's kind of, we would hopefully encourage kind of a pay it forward
Absolutely.
kind of ethos.
Yeah.
Okay. Business isn't just about the bottom line. It's not just about figures. It's about people. How does the network use that, use what it has to help the human side of things? Because that's something that is also key at the moment. Things like, keeping staff morale up or dealing with office stress or, just the pressures of the day-to-day.
Yeah, and as you say, particularly now, so
it is
communication and connectivity and community, just happen to all begin with C, are really, really key. So I was fortunate enough to be involved in the Chamber through the pandemic. So as we know, nobody could have prepared for what really has happened in the last few weeks, but there are similarities to when we went through the pandemic. So businesses were really struggling at that point too. So we kind of brushed off the handbook of what worked well there. And it was the consistency and clarity of communication. So we were able to amplify messages coming from the British Embassy. We were able to help with their collation of information about residents and what the sentiment was. And we also worked really closely to help those tourists, the British tourists that were stranded here. So our role as a chamber is always very fluid. It's like when it's good, it's all about connecting businesses. But actually in times of strife, it's about how can we help? Who can we signpost you to? And it's also listening. So we're part of the Dubai Chamber International Business Network. And I've actually been to Dubai Chamber's HQ probably about 5 times since this started. They've been incredible at providing this feedback loop so that they invite the chairs and the CEOs of the British business, the Italian, Canadian, French, Ukrainian, we're all there speaking directly to the leadership of Dubai Chamber, who are then speaking to the government to really help understand what those pain points are and to quickly aid that process.
There's been a real sort of banding together, hasn't there been? And I think maybe we don't really appreciate this because I kind of think we're so affected by what we see in the press, what we see on social media, and most of us realise that a large part of that is nonsense. And you kind of forget that actually this is a city, this is a country where people are, we're kind of thrown together, but people do kind of band together. There is sort of a we're in this together mentality.
Definitely. We definitely see that across all nationalities.
Yeah.
My daughters have been online learning, and everybody in their class is coming from a different geographical location. So even from the education perspective, the children that are being raised in the UAE aren't just thinking about how this impacts me here, but they're thinking about their friend and, perhaps they have family in Lebanon. So they'd be very sensitive to what they're going through, not just their experience here, but that kind of wider family network as well.
The key is the awareness of it as well, isn't it? Because, it is a very different place to grow up, I guess. What about the practical side of BCCD? And I mean, associations like yours generally, could you put that into some kind of context, that the real practical nuts and bolts help that businesses can kind of draw on?
Definitely. So again, things that have worked really well through this. So we have a weekly update that goes out every Thursday. So that reaches over 8,000 qualified leads. So that's UK businesses looking to the region. Right. So from a member's perspective, that's an amazing amplification of their expertise. And also from, showcasing Dubai as an amazing business landscape. When through the pandemic, we actually didn't do webinars. It was like a conscious decision.
Okay.
I think everyone was sick of screens, but we were actually the first chamber and business group to go back to live events. So my favorite story, which I've been telling a lot recently, is through working with Dubai Municipality and our hotel venue partners, we were the first to have an in-person event. Everybody was very nervous. And, I was extremely proud of the business team because ultimately if they didn't feel confident running the event, then we wouldn't have done it. But we worked with Media One Hotel, who's one of our venue partners, and we had 2 glass jars at the front of by the registration desk. One had red wristbands, which meant I'm really nervous. I'd rather you not shake my hand and I'd rather keep social distancing. Okay. And the other glass jar had green wristbands, which was I'm relieved to get out the house. I want to continue with my business. I'm happy to shake hands. I'm all about it. We had to refill that green wristband jar 3 times. Okay. The feeling in that room, the noise level, it was almost overwhelming. And that was the same for the events once we carried on through this. We had over 100 members at our first breakfast networking after this event, and we've been fully booked in all of our events since.
It's remarkable when you think back to the COVID time. I mean, your COVID manual is probably still sat on the desk, I suppose, and it's not been put back on the shelf. But it's remarkable to think back to that. And I've almost completely forgotten that the social distancing thing happened and how nervous we all were, how much we didn't know that hopefully we now do know. Are you seeing more companies seeking out your community at the moment?
Yeah, it's a really good question because when I look at our new members, obviously love having new members, but one of my favorite stats is the returning members. Okay. So it's those that from years ago had a bad experience or they didn't feel they needed it. When they come back, for me, that gives me a lot of joy.
I can understand that. It's like somebody's come to my party.
Yeah,
sort of thing, isn't it?
It's like, good, you're back.
And
you see the value, and probably they'll stay even longer because I think. But actually, through this, what's giving me the most joy are the British companies that might not have felt they needed the level of community that we've been providing, and suddenly they do. And that, for me, from leading the business team that cares so deeply and are so proud of the brand, to actually have somebody saying, I love what you're doing, you're a beacon for communication, we really understand your positioning in the market. That for me has been our biggest success through this period.
I suppose it brings it all back into focus, doesn't it? When something adverse happens, you appreciate the things that maybe you should have appreciated a bit more. It's been a really strange time the last 50 days, I think, for a lot of people, and there's still a lot of uncertainty in the air. So how do you adapt what you do in terms of the support that you offer, the service that you offer, as economic pressures evolve? Because what you're telling people one day could tomorrow be completely different.
Yeah, and that's been really key, actually. It was our ambassador, His Majesty's Ambassador Edward Hobart, said on a town hall recently that he urged UK PLCs to come out of crisis operations and start operating in this new normal.
Yeah,
because there is this paralysis where some companies have just thought, I can't cope. And, understandably, those that came through the pandemic that had a really tough time will be thinking it's too soon, the muscle memory is still there, can I do this? But there is so much economic support now. So at Dubai Chamber yesterday, they were saying the banks do have liquidity, but the message is engage with your bank, engage with your relationship manager as soon as possible, because there is structuring, there is situational lending available. There's signposting to debt advisors through legal, and that's something that we've been doing in addition to our weekly update, is a regional specific update, which has incredible open rates. It was like 60% open rate, but it's specifically looking at how to help companies and the main thing is seek advice as soon as possible.
Yeah, communicate.
Yeah, cash flow will be an issue, I'm sure, particularly for the hospitality sector or any companies that are related to the hospitality sector. So that was the immediate concern for the government. And now, obviously the whole supply chain's affected, the construction sector will be affected, but it's all about the word that's overused, but I do love pivoting. If you were expecting to get your materials in a traditional way that's not now working, how else can you get them? Could that actually open up a new partnership? But in all of this, it's all about good business. So it's making sure this, the causality effect, chicken and egg. The supplier and the buyer have to be doing good business for this all to keep working for a stronger recovery. As soon as people default on their relationship or a contract or a promise, there's a whole dominoes effect. And that's what I really hope not to see.
Yeah.
Because I do strongly believe that Dubai will bounce back. I think we'll all have whiplash, and we'll be in Q3, Q4 unable to get anywhere because every venue, every event that's been postponed will likely now fall in Q3, Q4.
Well, it's going to be capacity, isn't it?
Yeah.
That's going to be the issue, I guess. Pivot's a great word. I offer you another word, and this is the word for Dubai. It's bounce back ability.
Yeah.
Yeah, that's the word we've been using. Along with resilience, that's the other word at the moment, but I don't want to bring that in today. You speak to lots of business owners, I guess. I mean, hundreds, I suppose, over the course of your average month. When we say it's getting tougher to run a small business in Dubai right now, it doesn't need to be. So it's irrelevant me making statements like that. But I'm interested in the pain points that people highlight to you, whether it's cash flow, if it's regulatory, or if it's, I don't know, employee stress, whatever it is. What do people tell you?
So 60% of our membership, as I mentioned, are owner-managed businesses, and that's anything from a window cleaner through to a large consultancy firm. What I'm really fascinated about, it's around that employment structure. So quite often with a small business, they can't afford the level of expertise of, for example, a CFO, a financial officer, chief financial officer. Yeah. So there are lots of new disruptive models that are actually really helping the SME community. So it's called fractional recruitment. Right. So what happens is you have a top lawyer, a top finance director, a top marketing director. They may have chosen not to be working full-time in a large organization. There are now agencies that help match them to smaller companies where they might be more time poor. So the obvious demographic are women returning to work. Yep. So, for example, when I returned back to work, I didn't want to do 9 to 5 would have been normal, but the 8 till 6, which is the most obvious. So I was looking for part-time work, but I brought with me huge amounts of expertise of working in financial institutions and trade and marketing. So now I would go to one of these fractional recruitment agencies and say, this is all my expertise. I can do 3 mornings a week. So then the SME thinks, brilliant, because I can't afford a full-time, ex Saatchi and Saatchi marketing director.
Right.
But I can afford this small. So actually, I think there's an opportunity now to really shape who you have around your boardroom, who you have in your senior leadership, because the companies that I see that are faring as well as possible are those that were really scrutinized and had that level of expertise from UK PLCs, from international, that were policing cash flow early on, not scaling too quickly,
Right.
and making really conscious in intuitive decisions.
We've got a minute left. Loads of questions that I haven't even got to, actually. We should have booked you for an hour.
I can come back.
Thanks. Let me ask you just one more question. I always think of an organisation like BCC as a network, as a networking opportunity in many ways, because that's kind of the primary driver, I suppose. In your experience, let me ask you this, and I'm terrible at this because I can't network. I just end up saying stupid things, and people walk away thinking, "Why am I talking to the weird guy?" So, what's the big mistake when you see small businesses and they don't network? Is that the biggest mistake a small business could do? Should people just think to themselves, look, I need to get out there more? Is that the key?
Definitely. Yeah. I mean, to be honest, I don't think many people enjoy networking, and that's how we design all of our events.
It's not easy.
It's not, and it's daunting. It's like going into the school playground on your first day. It's like, oh, I don't know who to speak to.
Yeah.
So we're very inclusive. The whole team get to know members so that even as they're walking towards registration, I have to mention Corey from our events team. He's like human AI. He'll have looked the night before to see the LinkedIn profile. So as long as it's a photo that's not, not corporately catfishing somebody, but he'll straight away say, hello, and they don't even have to say their name. And then one of the other membership managers will then say, oh, I need to introduce you to XYZ. And we're constantly scanning the room to make sure that everybody is speaking to somebody that's useful. I mean, that's our day-to-day.
That's an assigned role kind of thing, isn't it? Okay. Does Corey know he's human AI, by the way?
He does, yeah.
Is he listening? Yeah.
I hope so.
All right.
Scanning.
Oh, man. Katie Keenan is the CEO of BCCD. It's the British Chamber of Commerce in Dubai. I appreciate you coming in. Thank you.
Thank you for the time. Thanks.
Good to have you here. This is Mira Business FM.
Mira Business FM, your daily guide to the markets, money, and more.
Good morning, it's 9:30 and this is the news on Mira Business FM. These are the headlines. Multiple entry visa applications to the UAE rose by 20 to 30% in April compared to March. The increase suggests travelers are choosing more flexible options when planning visits. A multi-entry visa allows visitors to enter the UAE and exit the country several times within a set period. And according to the General Directorate for Identity and Foreign Affairs, these visas can be issued for up to 90 days. Travel demand has also picked up. It has recovered to around 30 to 50% of pre-war levels. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve, and the rate for short-term borrowing remains 50 basis points above the base rate. Officials say the base rate reflects overall monetary policy. It also guides overnight market interest rates in the UAE. Gold prices are holding near one-month lows, pressures coming from rising oil prices and ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how investors view safe haven assets. Gold is under pressure as central banks keep interest rates high, and higher rates make non-yielding assets less attractive. Brent crude oil also has been rising, and this is increasing production and transport costs across the economy. Emirates NBD has successfully priced a $750 additional Tier 1 bond, and it marks the first major debt issuance from a GCC institution since late February 2026. The deal saw strong global demand. Investors came from Asia, Europe, the UK, and the Middle East. The issuance was more than 3 times oversubscribed, and this reflects strong confidence in the bank and the wider UAE financial market. That's the news for now. Follow more news on our website, mirabusiness.fm.
This is Mira Business FM. It's the morning drive. Coming up, we're talking gold, precious metals, and more. Jeff Rhodes, MD for Business Development, Middle East and Asia at Monetary Metals, is going to be here. Plus, we have a very special guest too. That is coming up at Mira Business FM.
Mira Business FM, your daily guide to the markets, money, and more.
It's Mira Business FM. This is the morning drive and time to talk precious metals. Jeff Rhodes is back. He is the MD for Business Development for the Middle East and Asia at Monetary Metals. Jeff, it's nice to see you.
Yeah, morning.
Good to have you here. Plus, I mentioned a few minutes ago we have a special guest today, and it's just let me get this in context and get this right. How nice do you have to be to our guest? Because it's the boss.
No. I think it's easier to say that Keith's probably one of the nicest people I've ever met. So, nice gets nice.
That's a pretty good introduction. Keith Wiener is here. He's the founder, the CEO, the brains behind Monetary Metals. Keith, it's good to meet you.
Nice to be here. Thank you.
Good to have you with us. I'll come to precious metals in a minute, but Jeff, I'm going to... notwithstanding our long-term relationship, I'm going to kind of ignore you for a few minutes and talk to Keith. I wanted to start with you to get to sort of grips with who you are, because Jeff bills you off-air and on-air, actually, as the expert in gold leasing. So I want to come to that. But you are an economist. You are a leading authority, it's fair to say, in areas of gold, money and credit, monetary theory. You're the president of the Gold Standard Institute in the USA. The problem I have with you coming in, it's a good problem, it's hard to know where to start, Keith. As an entrepreneur, you specialize in businesses that solve hard problems. Tell me about Monetary Metals. Let's start there.
So the idea for Monetary Metals came about. So let me take a step back from that, if I may.
Okay.
I built a software company from 1994 to 2008.
Is that Diamondware?
That was Diamondware.
That was Diamondware. Okay.
Sold that August 19, 2008 to Nortel Networks.
Okay.
As a historical footnote, that was the last transaction Nortel ever did as they began to spiral into bankruptcy.
Entirely unconnected with you, of course.
Yeah, I'll say yes.
Yeah, okay.
Yeah, we were a tiny little thing compared to this
Right.
multi-billion-dollar corporation. Going through that was a surreal process to just, first of all, to get acquired, and then to see what was happening in the fall of 2008. And I'm sitting with 100% cash, 99 point something percent cash, and a couple of too big to fail banks, trying to figure out what is going on, how do I protect myself from this. I spent 14 years building this company. I didn't want to lose, the reward, because crazy things were happening. So then I started to study first markets to figure out what do I do, where do I put my money, and then ultimately came to economics, came to the problem with paper currencies, not just the dollar, but the entire regime of it. Came to realize that gold had something to do with the solution. And I said, okay, am I an economist? Am I a computer science? Because my original major was computer science. What am I? Well, I think I'm a serial entrepreneur. I think I'm a guy that creates companies. So let me create a company to try to address the problem somehow. And that was the genesis of Monetary Metals.
What was it? I think it's very easy to. I remember 2008, 2009, but it is a dim memory. But just for anybody that doesn't remember that, what was it like at that time? Because it was the only word is a crazy time, isn't it? How did you feel at that moment? Because the realization hit, surely.
It was very surreal to me because the process of getting acquired was about 8 months. I think it really began in earnest in January of 2008 for me. Mm-hmm. During that time, you're just, your nose is to the grindstone. It's just endless with requests for diligence. Meanwhile, they're negotiating and renegotiating. It was very, very intense. And you get through that process, and all of a sudden, crazy things are happening. And starting in September, every day, there was some insane, thing, $800 billion TARP, and, oh, look, there goes Lehman Brothers. And stuff is going on every day. Every statistic is either shooting the moon or crashing into hell.
Yeah.
And I didn't know what was going to happen. And, you read all these doomy sort of things, like the world's going to come to an end, and you read other people like, no, we just need to get ahead of this thing. And it seemed to me, nobody, like as an economist, was really trying to get to the root of it. Everybody started in the middle and was just, circling around. What is the root of this thing? And so that was I felt obsessed, like a moth drawn to a flame, 7 days a week, 8 hours a day of just reading and just trying to, get my arms around what was going on until I realized, okay, it's a credit collapse.
Yeah.
Because they puffed up credit artificially, and then necessarily and inevitably it crashes at some point.
I mean, my memory of the time was the collateralized debt obligation. That's the phrase that stands out to me.
CDOs.
At the heart, the CDO issue, yeah.
And, they created assets of all sorts of things. And I remember reading the jokes about, you take, 1,000 pieces of what, and you bundle them together, and now you got the ratings agency to call this the AAA tranche and the AA tranche.
Yeah.
And meanwhile, the underlying is brown and smelly.
I remember, sorry to butt in, but I remember getting a message from a bank that we worked with, that funded us, to tell us what their overnight cost of funds was, because they went away from LIBOR. That didn't exist anymore. It was our cost of funds plus the margin.
Yeah.
And I really can't mention any names, but that cost of funds was above 50%. I'm telling you. And 24 hours later, we repaid our facility.
I bet you did.
Yeah, we did.
Yeah, okay.
Crazy.
Looking back now, it was a remarkable time, and I remember the build up to that. I was working for a publishing company, a magazine, and we were going, were we motoring? We had magazines across the GCC. It was really, and then by 2010, that had all changed. It was an amazing time. So then, monetary metals, that's the genesis of this idea, I suppose, after, you worked out what was going on, 2008, 2009. Where did monetary metals come from?
So, I eventually studied and got a PhD. Now, I always have to give the disclaimer, it's not from an accredited institution. I could never get a job with this as a credential.
PhD is a PhD.
But the work was real.
Right.
And, I started to, obviously I studied money, credit, interest rates, difference between money, which is gold, credit, which is the dollar, and everything, derivative from that. And was working on an economics idea, which is that the interest rate is kind of what regulates the flow of gold in a gold standard. So I used to give a lecture where I had a bit of a plumbing system. So you have this pipe, right? And there's a check valve. So here's the pipe, and here's the check valve. And when the check valve is parallel to the pipe, you get flow. And when you turn it perpendicular, it stops.
That makes sense.
And I said, now, I don't think real check valves are really intended to work like partially, but conceptually, if you turned it at a 45-degree angle, you'd get partial flow.
Okay.
Right? So, they're not, a real plumbing check valve isn't designed for that, but you get the idea. So that was, I was talking about that, and then that became a business thesis. If we offer interest to people who own gold, then interest is attractive. Everybody wants to make money, right?
That's an incentive.
So people will bring their gold. Now, every entrepreneur is absolutely rock solid certain that their idea is a winner. The only way to really determine that is you actually have to go to market and find customers and prove it.
Yeah.
And so that's what we did. And entrepreneurs are the crazy ones that are not daunted by incredibly daunting things like that. It's like never been done before. And of course, everybody told me I was wrong and a fool. And the gold, the paper people said, that's gold, it's stupid. The gold people said, that's only, you're talking 3% interest. Who cares? Gold's going to be $20,000 by tomorrow morning. Nobody cares about 3% interest. But, okay, don't listen to that. They're just the naysayers, right? You go to market, and it turned out, yes, people do actually like to get paid interest on their gold. And that, drives deposits.
What was it that people trusted? Because as you say you're the man that doesn't take no for an answer. You go to market with an untested idea. What was it that, what made it work? How did you get it across to people?
There's always a catch-22 with something like this. Until you have something, you don't have something, and then you need something that, you know what I mean? Okay. So, I put a lot of myself out there. I recorded videos, I did a lot of writing, and I think X number of people, which is a very small number in those days, The first lease that we did in 2016, so we had a hedge fund before that. We started to publish other market data and market analysis to build our reputation. But in 2016, we did the first lease. It was 2 kilos. And in those days, a kilo was a heck of a lot cheaper. That was like $72,000, at the time. So gold was a little over $1,000 an ounce. So it was a few people, but I think people looked at it and said, okay, I'll try it. Fool me once, shame on you. But if this turns out to be a scam, I won't do it again. But this guy doesn't seem to be a scammer. He's too intellectual, too deeply into it. I don't know what people thought, but it's approximately something like that. So we had a few depositors that put up some gold. And then we did that first lease, and then they're getting interest. Like, wow, this actually worked. So they gave us some more gold, and they introduced a few friends, and we hired a few salespeople in 2016, and it's been an exponential curve, ever since.
And now you're here in Dubai, and Jeff is among the, I was going to say Illuminati, but that would have come out wrong there, wouldn't it? But I suppose. But Jeff's with you. And your kind of reason to be now is to grow monetary metals. That's what you're doing. You've moved here.
I've moved here to Dubai, that's right.
Yeah. How are you finding it?
This is a very fascinating city. I'm having a lot of fun. I'm enjoying it. Live in a great place here. Met a lot of, fantastic people. The quality of life here was, second to none. I was hanging out with somebody, this is before the war, but, like in January.
Yeah.
And he casually puts his wallet down kind of on this counter. We're sitting at this hotel cafe, and he goes to the toilet, and he just puts his wallet down casually. And he came back, I'm like, man, you are so spoiled here. You would never do that in the U.S. You would never do that in the U.K.
Yeah.
You'd never do that anywhere else in the world. I could, maybe Japan, I don't know, but nowhere else.
No, you wouldn't. I mean, do you ever lock your car?
Can I tell you a story?
I would welcome a story.
So I went to live and work in New York in 1981, okay? And I used to travel we were in 10 Broadway, our office was 10 Broadway, and I was living on the Upper East Side, 76 and 2nd, I think. But anyway, I used to travel down on the metro, on the subway, right? And it was midsummer, and although it was a bank, I was shorts and T-shirt and got changed in the bank. So I'm on the metro, and I had to change. And when I changed, I realised I'd dropped my wallet. Now, I didn't have any credit cards or anything, but I had a lot of cash because, I was there on secondment. I didn't know what to do. And I went to see a guy on the station. He said, yeah, that's gone. I went, okay. I then got to work. I was in work an hour late because of this. And my boss said to me, don't tell me you've lost your wallet. I said, sorry? He said, you've lost your wallet, yeah? I said, yeah, on the metro, on the subway. He said, yeah. So a lady had seen what I'd done, and she worked at one of the big brokers, and I had a company ID inside, and she took my wallet to the company. And so I always, whenever people talk about, places and crime and everything, I can't say any more. My experience in New York was the exact opposite. So Dubai is fantastic, and you wouldn't be surprised in Dubai if you did that. But in New York, it was a shock. So you can imagine I stayed for quite a while in New York after that.
It's a remarkable stroke of luck. My wife left a purse in a phone box in Notting Hill once. And somebody called her from the phone box and said, hi, is that Veronica? And she's like, yeah, it is. Oh, I've got your purse with me. And the woman got on the tube, on the underground, and met her and gave her a purse back. There you go. There are good people around.
Yeah,
but
absolutely.
Keith's point is right. I mean, there is a certain safety and honesty more prevalent here than maybe other places. There are less chances. Do you know, I want to get onto gold in a second, but Keith, I've got one more thing I wanted to kind of ask you. I've read quite a lot of you blog regularly, you're quite active online, and you've got a website as well, keithwienereconomics.com. So I read some of your reflections pieces, which were really good. And what jumped out to me is that you travel a lot. You're an active guy, right? You spend a lot of time moving around. Less so maybe now, perhaps, because you've moved here. And I'm not sure whether you enjoy it or not. And I wanted to ask you that because now you've had time to reflect, you don't travel as much as you did. You upgraded you described your upgraded status at one hotel chain at one point as a booby prize. And that kind of jumped out at me. Most people don't do that. But that's a man who's probably needing a break from traveling.
I have a theory that everything that looks glamorous from the outside is actually a lot of blood, sweat, and tears for people that are living that life.
Yeah.
You look at pop stars, and they look fantastic on stage and whatever. And it's like, they get up at 5 in the morning, and they do a 2-hour cardio workout. Then they shower and have, especially for the women, 2 bites of yogurt. And then it's 3 hours of choreography. And then it's, half a melon with some cottage cheese. And then it's 4 hours of dance rehearsal. By the end of the day, their feet are bleeding, and they're just tired, and, So a lot of people would say to me, on social media, oh, man, that's so glamorous. Oh, I envy you. I wish I could be jet setting like that. It's a lot of time with butt and seat, in an airplane. and you get to the other side after 14 hours of a plane or whatever, and you're just tired, and your eyes are grainy. And, depending on what time of day it is there, you may have to, shower up and go to a meeting, or you may get a few hours of sleep. It's rough. It's rough on the body. It's rough on the mind. And so, and living away from home, you're living in a hotel room.
Yeah.
So you spend enough nights at Marriott's, properties around the world. Yeah, they give you this ambassador elite status, and it takes the edge off, and they recognize me, and it's great. But no, what I love about it is meeting people face to face.
Yeah.
I'm very old school that way. Well,
that's important, right?
A lot of people think you just send an email. If you can meet somebody, shake their hand face to face, break bread with them, have a drink with them, build rapport. After that, you can do the emails and the video calls.
Yeah, for sure.
But you started the relationship off on the right foot. You've demonstrated, the respect that I came to you. I visited you in your home or your home, jurisdiction. And, what we're doing, you're asking about people, trusting. It's a relationship. I mean, most businesses, but certainly ours, are a relationship business.
Well, they are. I mean, I would guess, Jeff, that you'd agree with that because that's very much the way you work.
Yeah, absolutely. And I must tell you a little story, just in case we don't get onto it, is when I first met Keith. It was at a Dubai Precious Metals conference. Right. I was moderating, and Keith had introduced himself and said, any way I can sort of get onto the panel. And I said, no, it's all done. I said, but I tell you what, why don't, I said, when I moderate a panel, I'm like a game show host. I like to involve the audience and get questions from the get-go. Yeah. And so I said, sit near the front and, participate, ask me some questions. And he was great. I mean, the questions were really in-depth, and to the extent that at the end of it, I said to the organisers, next year, I want Keith on my panel. And that was the beginning of a relationship and a friendship. Goes back 4 or 5 years.
Okay. What was that like at that time? What were your first thoughts of Jeff? Okay, if I can put you on the spot.
No, I mean, I already knew of him.
So you did? Okay. He's well known.
Yeah.
Yeah, he's famous.
And several people had recommended, you're going to be in Dubai, you need to meet Jeffrey Rhodes. So I kind of made a point of it.
or as we know him, the oracle that is Jeff Rhodes. That's the general description. Look, we've got 2 minutes left, so I do need to mention gold. And normally I'm like Jeff, yellow metal. Today it's Keith, yellow metal. Steady. Investors waiting on Jerome Powell's comments yesterday. Just thoughts on gold right now.
We still have a bull market.
Right.
So obviously we've had a correction. We've had, there's a lot of reasons why some people have sold. It's not, the one thing I want to sort of debunk is this idea that, it's not a safe haven. Safe haven doesn't necessarily mean the price can't drop. everything in markets today is volatile, right? And prices go up, prices go down.
Particularly now, yeah.
It's safe because it's not the credit obligation of some third party that you have to call into question. That's the thing about gold. It's a financial asset, so it's not properties, it's not 30-year-old whiskey aging in casks, it's not a 1955 Testarossa. It's a financial asset that has the liquidity of a financial asset, but it's not anybody else's liability. And that's what makes it a safe haven. So right now, demand is definitely softened. We see that in our data. There's some very unique data that we publish on our website, for free, by the way, for anybody who's interested in it. Demand has definitely softened a little bit, but we're still in a bull market for all the reasons that have been driving it the last 2.5 years. All those drivers are still in full force and effect. Nothing's really changed. Yeah, there's more liquidity tightness right now around the war, uncertainty, price of oil going up, a lot of traders getting caught on the wrong side of the trade, long oil contracts in Qatar or Kuwait, short Brent. That was a really bad, it was a great trade for years. And then when the war started, suddenly it was a catastrophically bad trade. And then, a lot of people paid very dearly to try to exit, because you have to sell the Gulf leg where there's no buyers because you can't get the oil out, and you have to buy the Brent leg, which is skyrocketing because you and everyone else is trying to unwind it, and that sucked a lot of liquidity, out of the market. But once that's done, which it probably largely is now, we're still in a bull market.
It's all the time we've got, unfortunately, gentlemen. We got through without mentioning Tottenham Hotspur. Jeff, I apologise.
Sorry, what was that word you used?
What is this?
Hearing is gone, Tim. Sorry.
It's good to see you. Jeff, first of all, good to have you here. MD, Business Development, Middle East and Asia at Monetary Metals. And the boss today, Keith Weiner, founder and CEO of Monetary Metals. It's been good to have you here as well, Keith. Thanks for coming in.
Thanks for having me.
Appreciate it. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good morning, it's 10 a.m. and this is the news on Mira Business FM. These are the headlines. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve, and the rate for short-term borrowing remains 50 basis points above the base rate. Officials say the base rate reflects overall monetary policy, and it also guides overnight market interest rates in the UAE. Gold prices are holding near one-month lows. Pressures are coming from rising oil prices and the ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how the investors view safe haven assets. Gold is under pressure as central banks keep the interest rates high, and higher rates make non-yielding assets less attractive. Brent crude oil has also been rising, and this is increasing production and transport costs across the country. The link between oil and gold has strengthened in recent months, and this is adding to volatility in the market. Emirates NBD has successfully priced a $750 million additional Tier 1 bond, and it marks the first major debt issuance from a GCC institution since late February 2026. The deal saw strong global demand. Investors come from Asia, Europe, and the UK, also the Middle East. The issuance was more than 3 times oversubscribed, and this reflects a strong confidence in the bank and the wider UAE financial market. That's the news for now. Follow more news on our WhatsApp and Telegram. This is Mira Business FM.
Mira Business FM. The sound of success.
It's the morning drive at Mira Business FM. 2 topics coming up to do with jobs and recruitment over the next hour or so. First, it's not about the money. Employee turnover rates still climbing. And the next topic is this. Who actually, really, honestly helps you get that job? That's next at Mira Business FM.
Business FM, your daily guide to the markets, money, and more.
This is the Morning Drive. It's Mira Business FM. Our regular Thursday morning guest, CEO of the Dubai-based regional recruitment firm, Mackenzie Jones. David Mackenzie is here. See what I did?
Regional recruitment. Technically, we have an office in the UAE, which is our home, and obviously we have an office in Riyadh, which I love Riyadh.
That's what I thought. Have you been in Riyadh recently? When no, you haven't been for a bit, have you?
No, I got stuck obviously in Australia. But no, I'm going the week after. The flight prices have gone through the roof.
What were they and what are they?
You used to get a return about 800-900 dirhams. Now it's about 3,000.
Oh,
yeah.
Okay. Well, it's going to get better.
That's my epitaph on my gravestone.
Yeah, I'm so glad you're here. What a positive morning we're having.
Exactly. It's that camel milk I've just drunk out in reception.
Did you have some?
You know what? I really like camel milk. It's very low in cholesterol. I mean, I've read the back of the packet, but it's really nice. I like it. I think it's good. I'm going to take some home.
Oh, well,
if that's all right.
We didn't pay. You've not been paid to say that either. This is what I like. The honesty. No, we had the boss of Camelicious in yesterday, and he sent some in. And I have to say, I'm really impressed. The ice cream's brilliant.
Have you ever had the camel steaks?
I've not, no.
Oh.
Really?
Really nice. Yeah. Okay. They're worth having. I imagine he probably does that as well, but...
I don't know. I've no idea. We didn't talk about that, actually.
Maybe I shouldn't talk about eating camels in the Middle East.
I'm thinking that, yeah. We'll edit that bit. So this morning, two topics today. I mentioned this just now. Second of all, who actually helps you get that job? That's what we'll do after about 10:30 in 15 minutes or so. The first one is this. It's not about the money, which is what we all say when it is about the money.
Yeah.
But it's not. Employee turnover rates are climbing. Now, studies often show that that's the case. This is a reasonably recent study. It's the last few years, but it still applies now. Consulting firm Perceptics surveyed more than 700 HR leaders, more than 2,000 employees. It's in the US. Doesn't matter. It
translates well here.
It crosses borders, of course. They talked to them about compensation and retention. More than 64% of HR professionals say their organizations saw higher than normal turnover last year. Many expect no slowdown. That's fine. The twist, though, what companies think employees want and what employees actually want ain't the same things.
Nope.
Yeah, and that, I think that would resonate with pretty much all and sundry, let's be honest.
Especially now.
Yeah, particularly.
Yeah.
Let's start with the headlines. So why are turnover rates rising and why are HR teams struggling to get ahead of that? Because that's an issue.
Yeah. I think there's the fundamental is the cost of living has gone up so much.
Right.
And I think people are driven by a number of things. You either work to live or you live to work.
Generally,
to a degree,
yeah,
and there's that middle ground. I love working. The salary I get, is it reflective of the amount of hours I put in? Probably not. But then again, I pay myself, so maybe I should have a word with myself about that.
Yeah, that's kind of your issue, isn't it? Stop making your problems mine.
It's not a listener's issue, and I must admit I shouldn't have flagged that one up. But yeah, I think the reality is everyone thinks that people move jobs for more money. It's one of the key drivers when you are looking for a job. You want to improve your lot in life, which is you want to provide for your family, you want to have better house, whatever, kids to school, etc. So you typically want more money. But we're seeing a real trend now where people are moving jobs, and they're almost moving jobs for a sideways pay move, but they're moving up in terms of the type of organisation. They're either moving from a multinational to a family group because they want to, they've been in the UAE for a long time. They see that as the growth, or they're moving across a business from maybe an HR role, maybe into a learning and development role. So they're using it as an opportunity to do something different. And salary often doesn't mean you'll get an increase in that.
Well, that's the important point, isn't it? Because you can do a job for an amount of time.
Yes.
And that's good. But in the end, you need to challenge it. Most of us need to challenge ourselves. Yeah. And what often companies will do is say, oh, no, we need you in this role, and here's a bonus, and here's
extra
money.
Your
salary. And thanks, but I need to. That's an issue.
Well, I'll tell you that the
Everything's an
interesting
issue
is,
with me today. I don't know what's going on.
it's the camel milk. I think the interesting thing is we often say to candidates, there's been a real trend in this current market because it's so unstable, that mainly senior people, when they're getting offers, they're accepting, and then when it comes to a start date getting closer, they go, actually, my company's offered me more money to stay.
Okay.
Now, what we always say, that's fine. And typically what a company will do is, the best thing to do is a company will try and retain its staff. But doing it because somebody has resigned is the wrong way of doing it, because they've already in their heads mentally left that business. So what companies often do is they'll offer them more money. And there's a very interesting statistic that LinkedIn did about 3 or 4 years ago. 80% of those people accept a counteroffer, leave within 6 months.
Oh,
because money doesn't solve all your problems. The fundamentals of why you're leaving the job are don't like your manager, bored, unchallenged, want something new, environment's wrong. Money just papers over that crack for a piece. Then after a while, you get used to it and you go, the same problems are here.
Yeah, okay. So what do employees actually, let's list what employees actually want. I mean, in this research, and this is the last few years, so it hasn't changed a great deal. Yeah. Twice as many employees prioritize career development over compensation when deciding whether to stay. So, okay, first question. Why is career growth now the main driver? When did that become the big thing over
I think it's always been a big thing.
I think so.
I think by default, if you're good at your job, you'll be paid the right amount of money for it. I think generally people aren't greedy. Maybe it's a utopian view on life.
It's lovely to hear somebody that thinks
I know.
I feel like patting you on the back. Oh, that's so nice.
Some people look at me and go, are you really a recruitment consultant? I genuinely believe people want to do a good job. That's my general basis on life. Right. And I think if you get into a position where you really enjoy your job and you're challenged by it and you're compensated fairly, everyone thinks they're slightly unfairly compensated because that's just the way people think. Mm-hmm. You will stay in that career because you're being challenged on a day-to-day basis, providing you're paid commensurately what that role should be, you will stay and you will move up. So I think when people come to me and say, I'm looking to make a move, my first question is, tell me why. It is never about salary. Never.
People don't leave companies, do they?
No.
People leave bad managers.
Exactly.
Is the adage. That's generally the case. So this guy just doesn't get it. Doesn't get it.
So we had a lady leave us recently, and she said, I really struggle to leave MJ because I really like the environment, the company. She's moved to a job that we didn't have and we couldn't offer her.
Okay.
So she had to leave in many ways.
Right.
Because the opportunity wasn't there for her to move into this business development role. We don't have that particular role.
And it was time.
She'd been with me 4 years. She was great. Really good person. Right. And we've maintained contact with her, and we always will do. And by maintaining contact, we then influence 6 people that she knows that we're a great company to come and work for. So another 6 of their friends maybe one as a recruitment consultant might go, actually, I've heard really good things about you. We built our brand on people recommending how good we were.
Okay. Here's a question for you. There's a big gap between what attracts candidates and what makes them accept an offer.
Yes.
Right? Good. So why is it that, as you term them, comps and bends, compensations and benefits? See, I do listen to you.
You're learning the lingo, aren't you?
I know.
It's frightening.
Oh, I've got some jargon for you today. Oh, yeah. But why do comps and bends matter less at the acceptance stage?
Because by the time that person's been through 3 or 4 interviews, they've mentally bought into that company and they've bought into the people who've interviewed them. The final stage is, is the package right? So we typically deal with the package right at the very beginning. We say, what are you looking for? And they go, 40. And I'm saying, well, it's only paying 35. And they go, yeah, I could do that if the other bits are right. Well, let's get that bit right. Once we get that bit right, then we put the candidate forward. Because once that's done, then it's all about, do they like the person? Is the mission good? Is the opportunity relevant to them? And are they excited?
Right, okay.
That's a key part, by the way.
And you get all of that stuff out of the way, the money stuff, all the mechanics out of the way at the start, and then they can ask the deeper questions, and they can look at, is this going to be good for me long term? Am I going to grow into this role? Does it have a future?
Clients don't want to talk about money. They genuinely don't. They see that as, if you go in there and you go, I'm keen to work with your organisation, but I want 70K. And they go, okay, but what do you like about our organisation? Well, it has to be 70K. The client will switch off very, very quickly.
Right. Okay. And I guess lots of companies, more companies than would like to admit, don't really have strong answers, do they?
No.
They're just doing what they're doing, and that's what we do.
It's interesting when you talk to candidates, certainly in my industry, you talk about the good recruitment companies out there, and there are very few really good recruitment companies. But you talk about, I mean, one of my biggest competitors is Cooper Fitch, and there's a guy called Trevor who runs it. He's a really good guy.
You talk a lot about Trevor.
Well,
There's a
we have a
bromance.
mutual respect because I think he runs a very good ship, and he treats people very well, and he's got a good reputation.
Right.
But there are a couple of other ones, and I won't mention their names.
I wish you would.
Yeah, I'm sure you would. But one of them is about to go bust, I think, anyway, which is actually not good because there was a company called Robert Half that was here, and they pulled out a couple of years ago. It's really sad when they go because they're a good company.
I remember them.
Yeah, when they go, it's just not anyway. So there are other ones out there that aren't so good, and the reason why they're not so good is the management team aren't focused. They just hire people, pay them too much money. And actually, the internal structure is terrible. They don't have a database. They don't, people rock up when they want, wear shorts in the office. There's all these things that they talk about, which is not good, even though they're getting paid much higher than most other recruitment companies.
Okay. Rant over?
Yeah. It was more of an expression to understand why people join companies, and I'm using the analogy for my industry because you can pay me 3 times more than I'm worth, but ultimately at some point I'm going to be unhappy with it because the environment's not right, the focus isn't right, the management team's not right, and the brand's not right. So whatever you pay me, I will eventually leave that company.
So most employers, is this a fair statement? Most employers underestimate how much job seekers value career development, value their futures, right? If that's reasonable. So the next question is, why do companies misread this so badly and so often?
Yeah.
Why? Because it's
a
worry.
I think what happens is you often get the power shifted in companies a lot more. So the MDs used to be people from a commercial background. There'd be the sales directors, the people. Now the people that run companies are more financial directors.
Okay.
And if you look at that, then they rule the company with financial constraints to a degree, which means that they start capping some of the salary levels. And it's all about getting the person for the best amount of money, not getting often the best person.
Right.
So you can tell there are certain companies in the UAE, and I can mention this one because we do a lot of work, it's Altair. They always say, we want to hire the best person. Their packages are good, they're a good payer, but their environment's good, and they value people. And throughout the interview process, you get to meet different people who will reiterate the same concept about they value people, they want your expertise, they want you to challenge internally, and they want you to be your best self. And I think when you get companies like that, then they tend to attract very good people. There are other companies, and there's a very large property one, which we won't mention, who are the worst employer in the world, yet they pay really, really well. But their turnover is people last maximum 18 months with them. And
property companies generally have a very high turnover anyway, don't
they?
So
I mean, there's some
hard environments to work in.
There's some great ones like Ellington and Emaar and people like that, but there are some really shockingly bad ones. And what happens is then that reputation goes into the marketplace that everyone knows that they're bad. So when anybody goes, oh, who would you recommend? You will never recommend that person to go to that company. I mean, I get them calling me all the time. So I've got this offer from this company. What do you think? And I just go, no, don't go near them. They're a terrible business. That's part of what my job is.
As bluntly as that?
Unbelievably so. I will be very honest with candidates what I think about companies. And that is 20 years of experience. That's people I know that have been to those companies and people who understand what the culture's like in those companies. And there are some very toxic ones. There are some really good ones here, but there are some very toxic ones. This is a global thing. It's not just a UAE thing.
No, it's not. All right, then. So the things that drive people out of the door, why people leave. Let's have a look at that for a minute. What does it tell us in most surveys, the top reason isn't pay; it's lack of career development. But it's also this feeling that it's like being stuck.
Yeah,
you know,
like in a relationship.
Well, it is, yeah. And at some point, you have to. I suppose you have to jolt yourself to get out of it. And then, of course, there's the bad manager side of it as well.
Yeah.
People entrenched in a role who perhaps shouldn't be. We've all come across them. He said through gritted teeth.
I've had some really good managers, actually. I think
I've had some great managers, but there's one in my head, and I'm thinking, I have no idea how you got that role.
Yeah,
I mean, that's everybody.
I sometimes wonder that when I meet people, I go, "How have you managed to get this job?" But then I meet people.
Sometimes you meet people and you think, "How are you still alive? How have you made it to today?" Honestly,
but I think if you look at manager, if you ask somebody why they're leaving, if you talk to a friend in having a coffee with them and say, "Why are you looking to leave?" My manager doesn't listen to me. I don't have a clear view on where this company's going in terms of an overview of what the company's doing, whether they're making a profit or making a loss. So again, I'm going to go back to us as a business. We have a quarterly review on how we're doing, whether we're profitable, whether we're not, who's doing really well. We communicate an awful lot of information, which in theory, if it gets out to the open world, then people know exactly how we're doing. I've never had an issue with that. So people tend to know what we're doing, which means they are not surprised if things go well or badly. In this market, it's going badly. Let's be honest with you. You know, we're probably 20%, 30% down in terms of job numbers, etc. But my guys know that, and they know that because we've done so well over the last couple of years, we'll last for a long time because we stashed our cash properly. Okay. We're a frugal business that looks at the long term. And you have to look at the long term here because the market goes up and down, as you well know.
Yeah.
So we communicate very clearly to our people what we're doing, how we're doing, what our future is, what our plans are, which means then people feel engaged about what Mackenzie Jones is doing. Now, there have been people who have gone, well, I'm not happy with being in this organisation. I don't like my manager. My job is then to solve that problem. If we can't, then we let that person go.
But you're a person. I mean, you're very transparent. You like people. You like people to be involved. You're actively engaging people, and the response from that is that's a trust driver.
Sometimes not, though. Sometimes I think we share too much because I think in the Middle East, if you share bad news, sometimes you go, "Oh my God, I don't know how to cope with that." So you've got to be prepared that when you're slightly more mature, you understand the consequences of an action. So if we say we're doing really well, then some people go, well, that means I'm going to get a pay rise.
Ding.
Ding, exactly.
Yeah, it is.
Or if we're doing really badly, people go, oh God, I'm going to lose my job. So you have to tailor your discussion with each individual. But I do believe I would prefer to be more open with people and tell them more than not tell them anything, because I think then people can make their own decisions, and if they've got a problem, they can come to me and go, I'm a bit worried about this. Can you explain that? And I'll go, yeah.
Okay.
Openness is, I think, the key thing.
No, I mean that makes a lot of sense to me. I mean, you're going to get some respect for that. It's not hiding anything, is it?
No, I think look, we retain our people. Our people stay a long time, but it does mean we do lose people because they don't see that their future is with us, and that's absolutely fine.
Okay, let's get back to this survey. One, very quickly, final question before the news. If salary increases and bonuses aren't solving the problem, what should HR teams be doing differently, or what should they be focusing on instead? And how should they do it?
I think HR have got to focus on how the line manager is hiring.
Right.
Because often line managers hire in their own image. They want a replication of them. Often that's not what the company needs. So when an HR person is coaching a line manager on how to interview properly, they need to say to them, it's not just about filling this particular job. How are you going to attract that person to the organization, and how are you going to interest them in the job now, but show them where they can be in the future?
Okay, pretty clear message, really. Companies fighting for employee turnover with the wrong tools. Employees don't want more money, they want more opportunity.
They also want money, let's be honest.
They do want more money. No, they want more money and opportunity, but opportunity is more the driver than
Yeah, and I think if you get a good opportunity, typically it will have the commensurate salary with it.
Okay, so that's the first part with David McKenzie from McKenzie Jones today. Coming up, who actually helps you get that job? And the subtitle here is The Power of Weak Ties. I've got an example of this. That's what we're talking about next. This is Mira Business FM.
Mira Business FM, where business comes to talk.
Good morning, it's 10:30 a.m. and this is the news on Mira Business FM, and these are the headlines. Gold prices are holding near one-month lows. Pressure is coming from rising oil prices and ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how the investors view safe haven assets. Gold is under pressure as central banks keep interest rates high. Higher rates make non-yielding assets less attractive. Brent crude oil has also been rising, and this is increasing production and transport costs across the economy. The link between oil and gold has strengthened in recent months, and this is adding to the volatility in the market. Emirates NBD has successfully priced a $750 million U.S. additional Tier 1 bond. It marks the first major debt issuance from a GCC institution since late February 2026. The deal saw strong global demand. Investors came from Asia, Europe, the UK, and the Middle East. The issuance was more than 3 times unsubscribed, and this reflects a strong confidence in the bank and wider UAE financial market. U.S. President Donald Trump is stepping up pressure on Germany over its stance in Iran. At the same time, Russian President Vladimir Putin is calling for restraint in talks with Washington. The U.S. is now considering extending the blockade of Iranian ports. This comes as tensions remain elevated, and the conflict is estimated to have cost nearly $25 billion so far. Meanwhile, oil prices are climbing amid growing concerns of wider disruption across the region. That's the news for now. Follow more news on our Telegram and X. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
This is the Morning Drive at Mira Business FM. Our regular Thursday morning guest, CEO of the Dubai-based recruitment firm, McKenzie Jones, David McKenzie. He's the guy with the noisy phone. He's here.
I'm sorry about that. I was looking at gold prices.
I know. Oh, I know. So, second part today. Yes. This is what I wanted to talk about. Who, you sent this, actually. I have to credit you. Credit where credit is due. Who actually helps you get that job? The power of weak ties. Now, we all assume that when it comes to getting a new job, friends, family, colleagues are the ones that open the doors, right? Generally speaking, that's what happens. This was a huge LinkedIn study. This is where this comes from. It was, and when I say huge, I mean huge.
20 million, wasn't it?
20 million people, exactly. It took 5 years. But that's not the case that friends, family, and close colleagues open the doors. It is acquaintances, not your closest contacts, that will most likely be the real key to landing the next role. I was really surprised by that. And then I thought, when I finished at my last job and I went freelance, my first kind of freelance job of note, came from somebody I knew a little bit who'd said, oh, you should talk to this guy.
Yeah.
And then there was a whole series of, oh, maybe talk to him, and you'd get a call from somebody, be like, are you doing this? And and that's how it all worked.
6 degrees of separation, isn't it?
It really was that. So I'm kind of not surprised by this. But I wanted to start with this, and I want to ask you what this is. What are weak ties? How do you...
So this survey is really interesting because I did a bit of research on this. It was actually done by a uniquely named Mr. Gronvetta in the 70s.
Mark Granavetta.
That's it.
Yeah, that's right.
So I think it was 1973. He I think he did something like 65,000 people, and he proved that to get a job back in the day when they were advertised in newspapers, you didn't get it from your best mate. You got it from somebody who knew you, who knew your friend. Yeah. It was almost 6 degrees of separation. I think then LinkedIn picked up on this and tried to do a proper survey over, I think it was over 5 years. They interviewed 20 million of their database, and they figured out actually the way you get your jobs, apart from the standard recruiters and you answer an advert, was people that knew you through an acquaintance. And it was almost like 4 or 5 degrees from your original friend or contact. So what LinkedIn did was they changed their algorithm. And they used it. And there's a thing here, I think they got, there's a bit on LinkedIn, and when you go onto your feed, it says, people you might know. These aren't your friends. These are mutual contacts of contacts.
Yes.
So what LinkedIn are trying to do is drive you to broaden your network, which helps their sell of their business, by the way. But it also means that your network expands by 5 to 6 times.
Well, you get this a lot on LinkedIn.
Yes.
And there are times when I get messages from people and I think, how on earth did that happen?
It'll be that.
Sometimes I'll be like, well, look, I don't know this person. I have no idea what this is. It's not connected to me. And then you look at it again, you think, oh, hold on a minute. This person knows this person. So I start to see how the kind of disparate branches
This is
work.
the key.
Yeah.
So different for me because I'm a recruiter, so I get lots of contacts anyway. But that little bit where it goes, people you might want to connect with, always look at them, because LinkedIn's algorithm has worked out that they know somebody that you know who knows you. And it basically expands your network. And if you look at that person, there's often a reason why. So I get a lot of people who are in HR who I may never have heard of, but they're connected to one of my candidates or one of my clients, and I always connect up with them. And it most of the time produces some gold, whether it be a good candidate, a referral for a job. So when I'm looking for, what we do as a recruitment company, if we see a job we like in HR, I will try and connect up with that company. Often the way I get that connection is through somebody I know who knows somebody else who introduces me.
Yeah, okay.
Power of introduction.
Yeah, so that you start to see how it works.
Yeah.
I've taken your advice, by the way. I forgot to tell you. Your LinkedIn advice. You know the 3, 2, 1 thing last week?
Which one?
Yeah, that's a good point. Yeah, I took some sensible advice that you offered last week, rather than anyway.
My useless advice.
But I'm doing that thing. You know when you click like and you hold your mouse down and it comes up with the little row of things. So I celebrate things now, or I go for the insightful thing, or I support it.
It's great. And you will what LinkedIn, their algorithm will pick up that you're being very. Your interaction on LinkedIn is increased by 10 times, 5 times, or whatever, because you're not just doing the usual thumbs up, you're actually commenting or liking, and you will then appear in more people's feeds, which means by default, you should get more work.
Oh, great.
Not that you need more work.
That's not what I was trying to do.
But it's interesting because I've had 4 people talk to me, sent me a message saying, I really like your interview on Mira. So Arabian Business connected up with me because we talked about ghost jobs.
Oh, that's right.
They written an article about ghost jobs. I'm now featured in it. I then got a client said, I saw the Arabian Business article talking about, can I have a chat with you about it? Because I'd like you to talk to my internal team. They've then given me 2 jobs out the back of it. So if you look at that connection...
Well, it mirrors exactly what we're talking about.
Exactly.
It is the 4, 5, 6 degrees, isn't it? Okay, so Mark Granovetter's theory. Let's try and get his name in as much as we can, because it's a great say.
It's like a ragamuffin name, isn't it?
It very much is. First proposed in 1973 that loose connections expose you to new information and opportunities that your close circle just doesn't have, right?
Yep.
So for 50 years, this theory is accepted, but never proven until LinkedIn. So the people you may know algorithm randomly varied how many weak tie or strong tie recommendations users received. Got to get this right.
Yeah.
Which created a natural experiment. And that's where this comes from, right? Okay. So researchers could compare people who were nudged towards forming more weak ties with those nudged towards strong ties.
Yes.
And then what they did was tracked how you actually got new jobs.
Exactly.
Right. Okay. So that's how it worked. So people with weak ties get more jobs.
Well,
or do they?
No, it wasn't. If you look at the report, it wasn't scientifically proven that was the case. What it did show was that people, if they ignored weak ties, were less likely to get roles.
Gotcha. Okay.
So
Okay.
what it found that people that got jobs through weak ties typically got their connections through people, the more mutual contacts they had, that formed these weaker ties. Does that make sense?
It does.
Yeah. So
Yeah.
in reality, you've got 10 weak ties. If 5 of them are mutual contacts, you're more likely to be referred for a job. If 10 are weak ties, it's unlikely you'll get recommended for a job because there has to be a reason why somebody would recommend you. So Farajo is connected. He just looked up that I completely caught him out.
I know.
If
He's trading online. I don't know what he does. I don't know.
He's doing his beard.
It's something to do with commodities.
So, example, if Farajo comes up in my LinkedIn tie as somebody that knows about trading,
Yep.
then some of my commodities trading clients might pick up that Farajo is good at commodity trading through my link because I'm a mutual contact.
Okay.
So the idea is that the more mutual contacts you connect with, the more likely it is you will get a job. Now, they don't need to be your friends. You don't even need to have met them or even talk to them. You're just connected to them because they can follow that path down.
Okay. And the best ties are often the ones that you don't even bother with, interact with at all.
Absolutely.
Okay.
So, example, I met a client yesterday who's known me for 10 years.
Yeah.
Never met him.
Okay.
So he reached out to me and saying, "Hi, David, we never met. Is it possible we can meet up?" I said, "Absolutely. You've got a great CV. I'd love to meet with you." I go and see him in his office, and he gives me 3 jobs. That wasn't the premise for me going to meet him. It was what happened after I met him. We got on very well. He saw the relevance in what I do. Just give me a load of work.
So, kind of the moral of the story at the back of all of this is don't be backwards in coming forwards.
Absolutely.
Yeah, and that's
what LinkedIn,
one way of putting.
It's what LinkedIn's about. I mean,
is.
the problem is we talk about this a lot. We talk about introverts and extroverts.
Yeah. You accused me of being an introvert last week.
No,
I agree with you. You're right.
I think I said he had introvert tendencies, didn't I?
Oh, he's just nodding because he's making a trade.
He's just bought some gold because Jeff has recommended it. Yeah, but I think that if you look at introverts, by default, they're not going to connect in with lots of people on LinkedIn.
True. Yeah.
But I know people who are extroverts with introvert tendencies, so they don't want to put themselves out there, but they force themselves to go out there, like you say you do.
Yeah.
And those people are actually quite successful because they force themselves to connect up with people on LinkedIn and to make an effort to get to know them, whether it be a message or a like or a comment on their blog, which means by default they then appear on people's job searches and
they're probably a little bit more picky about it as well.
Yes, absolutely. Yeah, they take time. Whereas
okay.
me, I'm like a shotgun. I'll scattergun approach and like everyone.
You're just like, oh, I really love you. You work by Showbiz Rules.
What's that?
Do you know what Showbiz Rules are?
No.
I keep talking about this, and behind the scenes, that's what we do. The person, Showbiz Rules dictate that at the moment, I like you more than anybody else in the world. As soon as you've left
That's
the
a
room,
fact.
I've forgotten your name.
No, that's absolutely
No,
rubbish.
I don't even
You
know
will
who
never forget me. Pretty sure you got a T-shirt with my face on it.
I haven't worn it for a while, but I have. It's fine. It's a little bit raggedy. No, but that Showbiz Rules. Do you know the thing about all of this though is it's weirdly counterintuitive, and I get the logic here. But why would somebody you don't really or maybe barely know be more helpful than a close friend? It's an old.
I can't actually answer that. I think if you look at the job market, people like to be seen as connectors. Because they liked.
There's a good feeling in that, I guess.
Essentially, and maybe I look at the world through slightly rose-tinted glasses, but my perception is people always want to help and they always want to do good. The reason they don't, they're too busy, can't be bothered, or whatever. But I think majority of people, if they get a chance to do something good, will actually take that chance to do something good. So if you look at LinkedIn. the goodness stems from if somebody says to you, "Oh, David, would you mind recommending me?" It's my son. My son always calls me when I'm on the radio.
He does. Just
that's not the Marine. That's the Porsche guy.
I was going to say, but why? It's just the name there that got me.
Oh, that's his nickname.
Oh, that's right. Okay.
Yeah. Sorry, digressing there hugely. I love my kids, and when they call me, I get very excited.
That's a dad thing.
It is a dad thing. So, and I think people want to help out. So, if somebody says to me, "Oh, could you recommend so and so? Can you help me connect in with them?" I typically want people to do that for me, and I will do that for them. So, if a candidate phones me up and goes, "I met a guy the other day and said, I know you're not working with this company, but do you know anyone there?" I will give them the phone number and the email address of the person they want.
It's a quid pro quo, though, isn't it?
Absolutely.
But it's a reasonable expectation. If you, I don't know, you call me and say, "Oh, do you know so and so? I need to talk. Can you help me with this?" I would more than likely do it. I know you would do it for you. But by the same token, it's in you to think, I owe him a favour, even though it's not. You don't really.
If a client said to me, so I had one of my clients said to me once, "Can you recommend a really good speaker?" And I recommended Nick Watson, who I used to race with, Nick and Rio, the Team Angel Wolf.
Yeah.
I recommend him because I like the guy, and I think he's got some really interesting stuff to do. But if somebody asked me about, do you know anyone can put a podcast together or something, I'd absolutely recommend you because, and Farage obviously, because he's obviously trading diamonds at the moment. But there's also
he's laughing, but he is.
I just saw him.
I don't know. I'm going to get up and look behind the.
Do you reckon he's made more money in this interview than we've actually earned?
It's Elon Musk in the making.
So I think that the reality is the reason why I would recommend you. There's a part of it I want to, we get on well. I want to say thank you for helping me get on the radio and stuff.
Right.
But also, I know you're good. So if I recommend you and you do a good job for the client thinks I recommend good people. So he's highly likely to come back to me again and talk about jobs, about candidates. So if you do something good with somebody, it always lodges in their brain, you've done something good and you're good at recommendations. They'll always come back to you again.
Yeah, and you don't need to know somebody well to understand that somebody's done something good.
Absolutely.
Okay, so the counterintuitive nature of that does kind of work. The other side of this is your close friends know a lot of the same people.
Yes.
Right? And they have kind of the same opportunities. They work in similar industries perhaps as well. So weak ties connect you maybe to different networks or different companies or industries, or they're like a bridge to somewhere that maybe you wouldn't otherwise travel to.
Absolutely. It's a really good point. They might have an opportunity for you you'd never even think about.
I'm just kind of thinking aloud at the moment, but that has to be it, surely.
So, example, if somebody came to you now and said, "Tim, you've been recommended by somebody. We're starting a radio station in America for Middle Eastern centric people and talking about the market there because the US is really interested in it."
Right.
You go, "That's quite interesting."
I was actually thinking exactly that.
But if you saw an advert on LinkedIn saying, Middle Eastern, you probably I'm not interested. But if somebody recommends you to it, you're more likely because it comes with a bit of credibility.
That's a very good point. Yeah. Okay.
So, example, when you're buying a car, you typically don't go into any random place and go, "I want that one." You go, "Right, what do I like?"
When it comes to me, I'm like, "Can I have the black one?"
My friend did that. She got an Everest, which is a really good Ford car. I said, "Why'd you get that? It's too big for me." And she went, "Yeah, I just like the colour."
See, I relate to that, but I'm just not a car guy.
She had a Mini before that as well.
Oh, well, there you go.
Yes.
No, I see what you mean. I do see what you mean.
The whole thing about job seekers and about the job market is the days of you applying to an advert and getting a job are over. It's all about connections. It's all about who would recommend you. It's all about getting that job on what we call the grey market, which is, we talked about it, ghost jobs. We don't advertise 80% of our roles.
That's still because it kind of knocks me back, but
because we don't need to, because we have a pool of candidates we know by a first degree, second degree, third degree. I'll ask my consultants who they recommend for that role, and typically we will be able to fill a role with it without ever going into the open market.
It's kind of always been. It's not what you do; it's who you know.
It still is to this day.
Okay.
Yeah, and it's in every form of life, isn't it?
No, it is. It is. So if somebody's job hunting now, or has picked this up because, they're going to think about looking, for example.
Yep.
What do they do with this information? How do you put this into
This
practice?
goes back to our previous conversations. You just need to be super proactive on LinkedIn. Not in terms, don't post an article every day. Look at the 3-2-1 rule we talked about. What's it? Chow Chow. What was the name? Cow Cow.
Oh, Kum Kum.
Kum Kum.
Kum Kum Shindy.
I love that name.
I know.
It's fantastic.
I just wanted to say it again.
I know, it's brilliant, isn't it?
Kum Kum Shindy is a very, very important writer.
It sounds like a greeting, doesn't it? Kum Kum Shindy. Oh, thank you. How are you? But
I'm sure in some worlds that's not really appropriate, but it is funny.
I just snorted on the radio.
I know.
So I think if you go into it, nice. If you go into how you approach your search and how you approach your job market, it's got to be all the stuff, the inputs you put into LinkedIn, all the connections you make, and if you know, here's a really good example. One of my friends wants to buy a house.
Okay.
He knows a development that is out near me. And we were talking about it the other day, and he goes, yeah, I can't get to see one. I said, actually, my mate's the project director for that site. Why don't I ask him if he can get a view? Think about a job. If you really want to get into Microsoft, which is a good company, you go onto LinkedIn, find out who the HR director is, who your peer is in that group. You'd link into them. You'd start a conversation with them. Don't ask whether there's a job there.
Right. Okay.
Build your relationship with that person so they start to see what you're doing is relevant. I guarantee at any point in the next couple of years, they go, by the way, we got this job internally. You probably want to go for it. I'll recommend you internally.
Clever.
That's how people get jobs these days.
Okay.
People get jobs through two routes, through recruitment companies, because we typically hold most of the roles. Most of the clients will use us. And we don't advertise those roles externally. It'll be clients that know you, know your expertise, and know your value in the marketplace. And it'll be friends that recommend you. Those are the three ways of getting a job these days.
Okay, so the weak ties are, that's the reason why the weak ties are so successful, but you need the strong ties as well, because the strong ties, the family, the close friends, are the people that get you through the hell of searching for the job.
Yeah, I mean, it's like everything in life. You want a ticket to a football match. Who do I know that works in a football? Well, my friend does that, and you work your way down this route to get to your end goal, and it is often just networking with people on LinkedIn who will eventually lead you to where you want to get to. Don't make it too obvious, by the way.
Well, this is what I was going to say to you next. Right? If you take that approach, let's take the Microsoft example that you made. You look for your peer and you connect with your peer. There's an ulterior motive there. That's to some people. And in the back of my mind, I'm thinking, that's a bit underhand.
Well, let me give it a really good example.
But, okay, no, if you're doing favours or returning favours or helping people along the way, then it's not. It's just moving forward.
Yeah, and you've got to be...
Kinda.
This is a very good point. A lot of people ask me, oh, hi, David, I see you're connected to Tim. Can you recommend me?
Right.
I may not know that person. So why would I recommend you to Tim? So one thing is about your friend network, you can't recommend everyone, because unless you recommend somebody you think is or know is good, you're going to get a random call for somebody who could be completely irrelevant to what you're looking for.
And so also might not be great.
And also what that does, that destroys your trust in me as a referral person.
Exactly.
So I think when people say, oh, can you, I often go, I'm sorry, that's not how we work. If it's somebody I know and is really good, I will offer up that to them. So example, the guy I met the other day who was a talent person, he wanted to get into this company. We don't work with them, but I know the people involved. I was very clear. I said, look, let me give you the guy's details. Say I've recommended you. And if he calls me, and he actually did, the client called me and said, do you know this guy? He's just used your name. I said, absolutely, he's really good. And he went, great, I'll see him. We're getting nothing from that. We're getting no benefit. But what we're getting, the client knows I'm recommending somebody good. And the candidate, once they get into that company, it's highly likely they'll use us as a recruitment company.
Yeah, that makes sense. Look, I mean, you remember Alex, who I used to work with,
who
is now Supercar Blondie. So over
Alex.
the years, I mean, she's great, and she's seriously successful as an influencer. But over the years, lots of people have said, "Oh, can I get a number?" And I can't give you a number because she's moved to a different
number. Actually,
you do have a number, but there's a reason for that. And sometimes it would be, well, could you talk to her? Occasionally, yes, but most of the time it's just not the right thing to do. So there's that in the back of your mind. It's always kind of there, and I kind of struggle with that.
It shouldn't be embarrassing. I mean, I was on the beach with a friend of mine, and he said, "Oh, there's Supercar Blondie over there," and Alfie was with me, my wife, and Alex came over and said, "Hey, Alfie, hey, David," and he was like, oh, "Can I get her number?" I said, "Well, ask her. I'm not giving it to you because you need to ask her because I'm in completely different industries, and I think if you're in recruitment, people want to get to know me because they think I'm a source of jobs, which I am to a degree. But if somebody recommends me, one of my friends, I typically will answer that recommendation because a friend has recommended them to me. Yeah. And I know they don't give it out lightly because you're right. Why would you ever give Alex's phone number out? Because it's a personal thing and you don't even know that individual. If I said to you, by the way, Tim, can you give me Alex's number? I want to reach out to her. You'd probably give it to me because we both know her.
That's different. Yeah. That's a completely different thing. But just and kind of just an approach based on because it's to get something, or I don't know quite what it is. So on occasion, I've kind of texted her and said, "Is this person? Oh yeah, that's okay." Or no, I haven't got a clue. This kind of illustrates this. This is a text in. Networking is so important. The reach knows no bounds. I got a recent big gig because I was recommended by somebody called Ashley from Qatar. The thing is, I don't know any Ashley or anyone from Qatar, but thank you, Ashley from Qatar.
Brilliant.
But this is the point, isn't it? It's where those connections come from.
Love that.
At some point, there is a bridge that you've built, even though you didn't know you built the bridge.
We got a company tried to buy us about 4 years ago, and it got recommended to the company that was trying to acquire us by one of our ex-clients. Said, "Look, who do you recommend in the Middle East is a good recruitment company?" And they went, "Oh, David's brilliant. You should talk to him. Can I have his number?"
Is that actually what they said? David's brilliant.
Yeah, they all say that.
That's so good.
Awesome. It's
I love that
OWE. Awesome. No, but the thing is that's how we got that potential offer. We turned it down, not because they weren't a great company. They're a really good company, but it just wasn't right for us. But the very nature, they came to us via somebody said, "Look, David's business is really good. They're very well established. This is what you're looking for." And actually, it did fit with what they were trying to do. It just didn't fit for us at the time.
Yeah, okay. So be open to the ties is the point, isn't it? And, don't be backwards in coming forwards. That's the other. But there was one more thing I wanted to ask you about this, because one of the takeaways from all of this, and you know more about this than I do, is the role of algorithms.
Yes.
Which is so important and so convoluted and seemingly difficult to understand. But what does this study tell us about how platforms like LinkedIn influence employment and how those algorithms work?
Well, I think that study was done in 1973.
Well, the original study, but the LinkedIn thing was much later, obviously.
Excuse me.
Yeah.
But what it did make LinkedIn realize is how can they make their product better by capitalizing on this referral by weak links. So their algorithm has been changed to try and utilize people you might know, which is a very prominent part on LinkedIn.
It is, yeah.
Which builds networks. So LinkedIn have commoditized that study from 73 to making them more money.
It's very, very clever.
But I genuinely don't understand how these algorithms work, but it's very logical. They see that by building the business network, by people referring each other, even if they don't particularly know them, means that LinkedIn becomes stronger as a business platform. At one point, Monster.com and LinkedIn were competing. The reason Monster failed, and I worked for Monster, I was the MD in UK, was we didn't build a community. Right. LinkedIn very smartly built a community. Instagram does the same.
Yeah, okay.
And this is the key to anything in life at the moment, is the reason why you should write original content on LinkedIn, because you're seen to be adding to that community.
Okay. So, for your next job, don't just lean on your closest friends. Your next opportunity might come from someone you barely know, really know, you met, or haven't even met yet.
Yeah.
That's modern networking, huh?
And you absolutely, this is the key. never turn down a recommendation or a connection unless you think it is just completely irrelevant to you. You don't know at some point in your career how that person's going to be useful.
Yeah, that's a very good point. Okay. It's been a good conversation today. I've enjoyed it. David McKenzie is the founder and CEO. He is
the recruitment sage,
the cause célèbre at McKenzie Jones. Nice.
I'm going to write all these down at some point.
I've got a list. I just take one off the list every week.
Thank you very much as well. Thank you.
Good to see you. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good morning, it's 11 a.m. and this is the news on Mira Business FM. These are the headlines. Multiple entry visa applications to the UAE rose by 20 to 30% in April compared to March. The increase suggests travelers are choosing more flexible options when planning visits. A multi-entry visa allows visitors to enter and exit the country several times within a set period. And according to the General Directorate for Identity and Foreign Affairs, these visas can be issued for 30, 60, or 90 days. Travel demand has also picked up, and it has recovered to around 30 to 50% of pre-war levels. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve, and the rate for the short-term borrowing remains 50 basis points above its base rate. Officials say the base rate reflects overall monetary policy, and it also guides the overnight market interest rates in the UAE. Gold prices are holding near one-month lows. Pressures coming from the rising oil prices and the ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how investors view safe haven assets. Gold is under pressure as central banks keep interest rates high. Higher rates make non-yielding assets less attractive. Brent crude oil has been rising, and this is increasing production and transport costs across the economy. The link between oil and gold has strengthened in recent months. This is adding to the volatility in the market. That's the news. So now follow more news on our website, mirabusiness.fm.
This is Mira Business FM. It's the morning drive with me, Tim Elliott. We're talking independent financial advice next, personal financial planning and more. Relief measures from banks for residents. Rising cost pressures at the moment, but that's our topic next at Mira Business FM.
Mira Business FM. The sound of success.
It's Mira Business FM. It's the morning drive. Welcome to James Thomas, who is an independent financial consultant, and it is nice to see you.
Likewise. Good morning.
Good to have you here.
Thank you.
About a week. What date are we now? We're the
30th.
Are we the 30th?
Yeah.
How is it May?
I know.
This was April the 17th, and it's an article in local media. I think it's a Gulf News article, actually, but it's interesting because of the situation we're in, the times we're in, what we're living through, and it's financial in nature, but it's specifically personally financial. So here's the headline. UAE banks roll out relief measures for residents amid rising cost pressures, okay? And we can all relate to that.
Very much.
James, of course. So, number of different measures. We'll mention a couple of the, I suppose, products, if you like, in the next sort of 20 minutes or so. But it's things like free loan, deferrals, zero interest payment plans, because for a lot of people, this is a difficult time.
It has been very difficult, absolutely. Yeah, I mean, we've seen big sectors of the economy being very hard hit. And obviously that then translates into difficulties with salaries to be paid.
Exactly.
And then obviously if you have any loans, those repayments as well. So yeah, it's a welcome package that's been introduced to try and help people.
Yeah. So in return, lenders have been looking at what they can do across everyday expenses or healthcare or housing or other things. And I think what it's indicative of is that banks are increasingly trying to be more flexible with their offerings. And I think it's fair to say that we see lots of, you quite often see financial products and you kind of go, oh, it's a little bit unusual. And it's this kind of broadening of the product base to try, in cases like this, to help people a little bit.
Yeah, and I think it's all of that, but also it's the institutions actually often in the past been perhaps accused of being a little bit out of touch, inflexible, sticking to the terms and conditions that you signed up to. And this is just showing that actually there is a side that when there are these extraordinary events, that they can actually offer some assistance. They can adjust the terms. They can give a bit of assistance to their customers.
Yeah, I mean, it makes a big difference if you don't have that kind of over your head, don't you? And if,
yes.
The first thing that you really should be doing is obviously talking to, if you do have a loan or you do have some sort of credit line, and it's going to be harder, is to talk to whoever you owe to.
I mean, I think we've discussed in detail previously, but it's always worth reminding people that if you are suffering, there is difficulties, if you are struggling to make that payment, please don't just bury your head in the sand and hope and pray that it goes away. Speak to the institution concerned, because even without this type of announcement, most banks, while they won't publicise it, would much rather help you than end up having to be placing you in default, go through the court process. Because at the end of the day, that probably would end up costing them, from a practical point of view, regardless of whether it's good, bad or indifferent, from just a pure expense, it's a lot of hassle.
It reminds me...
they can... Actually, it's a double win then, because one, they help out you as their customer. You then probably end up being much more loyal to them because you will remember that when they helped you, as opposed to just saying, nah, you've got to pay us or else.
Yeah.
But also, as I say, from a pure expense point of view, they've then got to go to the trouble of reclaiming or repossessing whatever it may be. Is it a car? Is it a property? Whatever it may be. Then they've got to try and sell it. Then they've got to try and take the ownership, then sell it. And it's just the process and the time and the effort, and then whatever they get back from it may not cover what it is that you owe them. Rather than actually just going, you know what, we can actually win. Be seen to be doing the right thing for our customers. We will probably end up actually getting more back
Well, you could be seen to be doing the right thing, but also doing the right thing, and that's
Sorry, yes,
a
that's
good
what I
deal,
should be
isn't
saying.
it?
That is absolutely the crucial part. It's not just seeing, it's doing. But actually, as I say, from a financial point of view, while it might delay your profit, because at the end of the day, these banks are there to make a profit. The key word is that it's only a delay, as opposed to you go through that process of forcing someone into default, reclaiming that. You invariably will not get back what you're expecting to. Certainly not the full, even the interest that you were going to earn on that loan, on that debt. But by actually doing the right thing, and again, in the right circumstances, if someone is just clearly not
See, you can hold somebody upside down by their ankles and shake them to get the money out of their pocket. But if there's no money, there's no point doing it.
Things falling out.
We should do that. It'd be a great Instagram reel. But that's a different idea. But I mean, that's the point, isn't it? So that kind of sets the context of this. But it is possible to talk to, your credit card company, your bank.
Speak to them.
Yeah.
Please, because as I say, they will obviously, you won't be the first person to be in this situation. They will have a process. They will be able to put a process in place, a payment plan, a deferment, a delay. But to say, they will only be able to help if they know, rather than simply waiting until such time that their procedures and a lot of it is automated now. Things will click over as time and months pass by, and may get to the point where you can't get back to a position. Whereas if you can ring them up or speak to them, email them, whatever it is, but communicate with them earlier the better.
WhatsApp.
Yeah. Whatever.
Tweet.
I don't know. But maybe not tweet.
Do people still tweet? I don't know if people do. I'm not sure. No, that's the point, isn't it? So ask for a loan holiday. A loan holiday is not an unheard of phrase these days. And, there are possibilities there. Just to put that into context before we go any further, what is a loan holiday? How do they generally work? How are they structured?
Again, it depends on the institution, but typically it's simply just to take a payment. Normally, again, it's you stop paying for a length of time, and then the term of the loan increases by however many months that you have delayed by. So again, it's not stopping them earning their interest, but it's just deferring. Now, there may well be a fee or a charge that's levied at the end of that, but at least it gives you that window to get things.
I was going to say there may be a fee there, but if there is, you've had the breathing space.
You've given you the breathing space, the time to put things back in order. Wait for the current situation to normalise, and hopefully then be in a position to start repaying that loan.
Well, let's talk a little bit of specifics here, just for a moment. And this wouldn't apply to me, but this is something that I think it's DIB, it's Dubai Islamic Bank, who are offering. This is direct relief, and this is eligible frontline workers in the armed forces. I think it runs till the end of June. But it's 3-month deferrals on personal loans, on auto loans. There's no extra fees or extra profit rates in there. They're offering 0 fee. I think it's payment plans for 6 months as well. So potentially that's 25,000 customers. But the point of this is, okay, so you offer people breathing space, and this is specifically targeted at people who've been under a lot of pressure over the last 60 days or so. You're offering something. There's a community aspect.
Yeah,
to
very
this,
much
as well. So it's an example of the right thing, isn't it?
Yes.
Yeah.
And as you said, all of the above. It's a very communal thing to do. It's the right thing to do. These people have worked very hard for us, protecting us.
Yeah.
And if they need some assistance, then DIB has stepped up to offer that.
So extraordinary times we're back to again as well. So, but the point is that these kinds of facilities are there. There was another one that this article in particular noted, and it's quite interesting because it's not something that I would immediately think about, but this is easing pressure on day-to-day spending, and this is a Mashreq thing, and it's partnering with Toothpick. Did you see that?
Yes. And I had to look up who Toothpick were.
Yeah, so it's financing for dental and aesthetic treatments, basically. And it's not something that I immediately kind of went to. And then I thought, well, dental treatments hit you when you least expect.
Yep.
Or, the toothache doesn't wait. Toothache waits for no man or woman. Or person. Or toothache just hits you hard.
Yes.
And you haven't always got clove oil. So... But I thought this was really interesting, and it's kind of one of those things. It's an innovative kind of idea, but you can see the use.
Very much, as you rightly say. I mean, it might sound quite niche. We'll hope we don't get toothache, but like you quite rightly say, it strikes at the worst, most inopportune moment. And to know that customers of Mashrek might be able to take advantage of this facility, then that's great.
Yeah, but it's up to 150,000 dirhams. It's all digital.
That's quite some serious dental work. But
well, it would be. Yeah, you never know, do you? But you can pay over time and everything else.
Yes.
But what's interesting about this, I think, is it's this move towards sort of embedded finance, where you've got services and the lending is built in. It's that broadening of what banks are able to offer.
Yes.
To maybe ease a little bit of pressure. I know that you have to pay, and I get that. But what we're talking about here, more than anything else, is just the backstop. And that's a lot of your thinking, I always think, when it comes to your sort of approach to personal finance. It's getting all of the ducks in a row so that you can move forward.
Yes.
Getting rid of the pressure.
Yeah. And like we discussed last week, those the 7 signs that you are in a far better position than you thought. And this leads into that, because it's, while you might be moving in the right direction, to say none of us expected the situation we found ourselves in earlier in the year. I don't think we did. And has led to a number of issues, one of them being potential financial difficulties. And to say, any of these facilities that are being offered, then are I'm sure very welcome.
I mean,
to people.
we've all had to change plans.
Yes.
Everybody's had to adapt in some way, and it's kind of incumbent on the financial institutions
to join in that process.
Their customer base and join in. Exactly right. I mean, one of the sectors that has been hit, apart from tourism, obviously, and hospitality, is property, real estate. It's slowed down. Not as much as I think some people would maybe argue, but there's certainly been a slowdown. Perhaps we were awaiting a correction of sorts, or a readjustment, or a realignment, or a stabilisation, however you want to put it. But I think some institutions are now allowing buyers to secure mortgage approvals at the booking stage. Now, normally it's near handover.
Yep.
Okay, from what I understand it. I mean, it's going to apply to certain projects or certain developers. But what's smart about that is that it reduces uncertainty in off-plan purchases.
Yes.
Which is a really good thing at a time when uncertainty is kind of everywhere,
Yeah, because if you know you can get the loan at this time when you've got that pre-approval, well, great, because you can then move ahead. Because if you want the property either for yourself or as an investment, but if you've got that uncertainty to think, am I going to get a loan in X months' time?
Well, exactly, because if you pre-book and you're like, I'm going to do it, and then
you can't, then you lose your booking fee.
Exactly right.
And your deposit, etc. You might think twice about doing it. But whereas if you've got that pre-approval of the loan mortgage application at the point of booking, then you can move ahead, because you can still buy what you want, knowing that as and when it's ready, the loan's ready and waiting for you too. Yeah,
well, I first looked at that as a story, and I saw the headline. I'm like, yeah, it's great. And then I sat and drilled down into it for more than my 10-second glance and realised that's a big shift, because
it's a huge shift.
Off-plan sales are, they're the thing.
Yes.
Super dominant.
Yes.
So now there is that removal of uncertainty is a good thing. So I think that's a really important initiative. It's just important to talk about these things. It's something else I wanted to talk to you about. Debt management. You're good at this.
Am I? Right.
Well, I don't know. I'm pitching you as being good at this. But for people juggling multiple payments, and lots of people are doing this, of course, what can you get from banks? What are banks offering when it comes to, helping people manage existing debt. If you've got a credit card, a credit card here, one here, you've got a car loan here, you may have a mortgage here. That's worry.
Yep.
Maybe on the same day every month, but certainly within a week.
Yeah, well, first thing is, again, to speak to, if you've got different institutions, speak to them to see what they're offering for the other product. So you've got a car loan with one, mortgage with another. Is there any option to move the loan at a better interest rate? Yeah. Credit card is a classic one, certainly. If you're not paying the payment each month, if you have an outstanding balance, is there an opportunity to move that to a different bank at a better interest rate? So that actually, when you pay it off, you're actually paying off more of your principal rather than just servicing the interest.
And look to see you can move it to something with a preferential rate in some way, or there's some flexibility built in there. Yeah, okay. What about consolidating debt, consolidation loans?
Yes, certainly that's an option. Personal loans, i.e. loans that are not secured against property, be it car, house, tend to have a higher interest rate, but typically they are a lower interest rate than, for example, credit card. So if you do have a significant credit card debt that's on a very high interest rate, which is not a normal position to be in, I'm hesitant because it's not really the best advice, but equally, if you can move from a credit card debt to a personal loan, typically you can significantly reduce the interest, but the key is then to then manage the credit card going forward. Because I've certainly seen with people that they've maxed out their credit card, they've been offered a personal loan, interest rate has halved or more, great, means I can overpay, get rid of that. But they keep the credit card, and before they know it, the credit card's back to where it was, and they've now got a personal loan, and the credit card's back to its full capacity again.
Yeah.
So again, it's learning that lesson that it's not free money. It does need to be repaid. But if you can do, absolutely, and be more disciplined with your finances in the sense of move it to a personal loan, then you've got a fixed monthly cost for a fixed period of time at probably a lower, better interest rate. Get that paid off. You know where you are. But like I say, then take more control of your credit card so it doesn't lead you actually into a worse position than you were in previously.
So you would think, wouldn't you, that if you are in a situation and you think, no, I need to consolidate debt here, I'm going to take a personal loan out to pay a card, and that's fine. If you've made that move, then that means you're on the road to recovery.
You would hope so.
You would hope, but
I have seen, as I say,
it's about changing habits, isn't it? And habits are hard things to break.
Yes.
Yeah. So there's a psychology there. How did you, just completely as an aside, how did you learn to be sensible with money? Or were you always?
How did I learn?
Did you make them? I mean, I got a credit card and thought, oh, this is great, and was an idiot.
I can't remember if we had this conversation, but I can remember sitting down with my dad.
Really?
And just going through how he used to, with a checkbook, going, here we go, showing our age.
Writing on the stubs and everything.
So he would then compare that to his bank statement. And again, perhaps why I've always been quite open about money. A lot of people, it's the last taboo. They'd even talk about their health and the most personal of issues. But when it comes to money, he's like, oh, no, we can't discuss that. Whereas, thankfully, it was quite open in our household. This is what's coming in. This is what, and it gave you an idea. What does it cost to run a house? Electricity bill, gas bill, water bill, council tax, and you could see where these. It then became rather than an abstract thing that these bits of paper pop through the letterbox and then either went in the bin or in a file. You actually what did these things mean? What did you? And how were they paid?
People are going, letterbox? What is this letterbox of which you speak?
P.O. box.
Do you mean the P.O. box? Yeah, right.
But my point being, it just, and again, which is why I still say now, is a very important thing to do is actually to sit down 1 month and just look at your bank statement, look at your receipts, see what's coming in and going out, because it then turns it from abstract to the reality of what your life costs. And you can actually then realise, well, what have I spent my money on? And that's how I learn.
The reality of what your life costs. That's what we should call this segment.
That's not a bad.
Much better than just James Thomas is an independent financial consultant.
There you go.
No. Look, I appreciate you coming in. Thanks again.
Hopefully it's been useful.
I hope so. This is Mira Business FM.
Mira Business FM, where business comes to talk.
Good morning, it's 11:30 a.m. and this is the news on Mira Business FM. These are the headlines. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. The decision follows a similar move by the U.S. Federal Reserve. The rate for short-term borrowing remains 50 basis points above the base rate. Officials say that the base rate reflects overall monetary policy and it also guides the overnight market interest rates in the UAE. Gold prices are holding near 1-month lows. Pressure is coming from rising oil prices and the ongoing U.S.-Iran tensions. Higher crude costs are pushing up inflation expectations, and this is shaping how investors view safe haven assets. Gold is under pressure as central banks keep interest rates high. Higher rates make non-yielding assets less attractive. Brent crude oil has also been rising, and this is increasing production and transport costs across the economy. The link between oil and gold has strengthened in recent months, and this is adding to volatility in the market. Emirates NBD has successfully priced a $750 million additional Tier 1 bond. It marks the first major debt issuance from a GCC institution since late February 2026. The deal saw strong global demand. Investors came from Asia, Europe, the UK, and the Middle East, and the issuance was more than 3 times oversubscribed. This reflects strong confidence in the bank and the wider UAE financial market. U.S. President Donald Trump is stepping up pressure as Germany over its stance on Iran. At the same time, Russian President Vladimir Putin is extending its blockade of Iranian ports, and this comes as tensions remain elevated. The conflict is estimated to have cost nearly $25 billion so far. Meanwhile, oil prices are climbing as well amid growing concerns of wider disruption across the region. That's the news for now. Follow more news on our website, mirabusiness.fm.
This is the Morning Drive. Just over 4 weeks into the Strait of Hormuz crisis, energy markets still on edge. Oil trading well over $100 a barrel. Shipping risks remain, and insurers are tightening conditions as uncertainty persists. What began as a regional flashpoint is now feeding directly into global recession risk, and supply chains are adjusting in real time. Governments are watching closely. The key question, are markets finding a new normal, or is a bigger shock still building? Lots to discuss. Robin Mills is the CEO of Kamar Energy, joins me on the show. Where to start? I guess the big, broad question to begin with is as good a place to start as any. Where do things stand right now in the oil markets as this crisis continues, Robin?
Well, oil prices jumping again, and this seems to be a consistent pattern. We get them talked down, but then when there's no action over the weekends, then the market opens on Monday, and then they're up. So up about a couple of dollars overnight, and really the expectation now, I think, the transit through the Gulf has hardly changed. Yes, a few kind of politically favoured ships are getting out, but really hardly any increase, and certainly nowhere near pre-war levels. And so the crunch continues to get tighter and tighter.
Well, it does. Somewhere over $100 a barrel, as it seems to be at the moment, for that 159 litres. Just how serious at this point is this for the global economy?
Well, very serious, and getting more serious with every day that the strait remains almost totally closed. So, the tankers the last tankers that left before the outbreak of the war are now arriving at their destinations. They're arriving at the further points. So first of all, of course, Asia, India, and so on, and then now it's time to arrive at in the first few days of April that they will be arriving in Europe and some of the further Asian points. And after that, no more tankers are coming. So then the crunch will really start arriving, and countries there will have to cut back on refining.
This is the Morning Drive at Mira Business FM, and our main news item this morning, of course, is news that appeared yesterday afternoon. As of May the 1st, the UAE, a foundational member of OPEC since 1967, will walk away. We're moving from a cartel-coordinated market to an independent UAE energy policy. Robin Mills is the CEO of Kamar Energy, joins us from the UK, I believe. Robin, welcome to the show.
For today, yes. Good morning, everyone.
Good to have you with us. So this news dropped yesterday. We came across this from the Emirates news agency WAM just after 4 yesterday afternoon. The opening statement in the release noted the decision follows a comprehensive review of the UAE's production policy and its current and future capacity, and is based on our national interest and our commitment to contributing effectively to meeting the market's pressing needs. Unexpected, essentially immediate. What do you make of the timing, first of all?
Well, I think the timing is pretty clear. Obviously, it's because of the current crisis in the Gulf. So, the UAE obviously can't export oil freely as it would wish, can't set the production levels it would want, same as Saudi Arabia and its other OPEC colleagues in the Gulf. So that means this move to leave OPEC has no immediate impact on the market. So it seems like a good time to do it. And let the market digest it along with all the other news.
It's an historic statement, isn't it? The Emirate of Abu Dhabi joined OPEC in 1967, before the UAE was even formed in 1971. And I think it's fair to say that this nation's played an active role supporting global oil market stability during its membership. National interest market dynamics are cited. I know it's been a number of years that the UAE's watched, the industry's watched the UAE's capacity expansion. They're aiming, I believe, for 5 million barrels a day by 2027, maybe a little bit more than that. Were OPEC plus production quotas essentially a glass ceiling on the investment?
Yeah, absolutely. As you say, the UAE had wanted to increase production capacity to 5 million, but probably is around that now. Maybe even go beyond that over the next few years. Whereas the OPEC quota just before the war broke out was 3.2 million. So, leaving 1.8 million barrels per day on the table is a lot. And the UAE was also trying to increase its gas production, has big ambitions on the industrial side in AI and so on, oil, gas exports as well. Oil, of course, often goes along with gas and vice versa. So the need to kind of manage oil production was also hampering the ability to be completely flexible on gas.
Robin, the exit means production freedom, but right now the Strait of Hormuz is impassable because of the conflict. Does this freedom actually unlock any value today, or is it just it's entirely a long-term play for when we see a stabilization in the region?
Yeah, it makes no difference today, of course, because the UAE is exporting as much as it can, but it obviously can't use the Gulf at the moment. So no immediate impact on production. But when the crisis is resolved, when normal transit through the Gulf resumes, then the UAE, yes, will have freedom, and whether it will use all of that 5 million barrels per day of capacity immediately, or whether it will choose some other level, we'll see. But it at least has that flexibility now.
From a market perspective, and I'm interested as well because you're obviously outside of the UAE at the moment. You're in the UK. From an international perspective, I mean, aside from the obvious oil prices right now, but I'll include that, of course. What does this mean immediately, and how is this being viewed now that you have kind of the outside perspective a little bit more?
Well, look, I think the first question everybody asks, certainly in the UK and other countries, is, does this mean lower oil prices? Because
sure.
People are starting to suffer from petrol prices and diesel prices and so on going up. So I have to tell them, sorry, unfortunately not right now. Maybe down the line. But people, of course, are very interested in the in the wider implications for the oil market down the line, and for how the major oil producers work together or go their own ways.
This is not a move without precedent. Qatar left in what, seven years ago, 2019. They're a much smaller producer, of course. UAE is a much larger producer. With the UAE leaving, what does this mean for OPEC's ability to act as kind of a global swing producer?
Yeah, as you say, OPEC members have been in and out over the years. Indonesia, which was a very influential member in the early years, Indonesia left. And as you say, Qatar left in 2019, and some smaller African members have been in and out.
Right.
So not unprecedented, but it is the biggest producer to leave the group. So it reduces the OPEC's overall market share, so that makes it less influential. It'll still be very important because it still has Saudi Arabia, of course, along with Kuwait and Iraq and other important oil producers. But it does diminish its ability to impact the market and control production levels to some extent. Yeah,
it's a move that means the UAE is released from production cuts decided and enforced by the cartel. So potentially down the line, as you know, maybe global oil prices. But what does it mean for OPEC's control as a production and then to some extent a pricing cartel over the market?
Well, OPEC, for a very long time, OPEC has not targeted price levels overtly. It has targeted kind of market supply, and when it felt the market was oversupplied, it would agree to take some oil out of the market. OPEC always has to work together, of course, between the different members, and there'd often be differences of opinion, and sometimes that kind of consensus would break down entirely. You go back to some famous episodes like in 1998 when OPEC decided to increase production just going into the Asian financial crisis and caused a crash in oil prices, so that they don't necessarily always get it right, and sometimes they can't reach consensus on going the right way. 2016 they set up the broader OPEC Plus framework, which brought in Russia and a few other countries because they realized that OPEC on its own wasn't influential enough because of the rise of Russian production and the rise of US shale production. They only had about a third of the world market. That wasn't enough to be influential, so they had to bring in Russia. So this move by the UAE, yes, it kind of diminishes their impact to some extent. But OPEC and the bigger OPEC Plus framework with Russia and some others will still be a very important player in the market as long as they can maintain some consensus.
Well, that's an interesting point. What about the impact on the cohesion between the remaining members?
Well, it should, if anything, improve the cohesion because one member has left which wanted higher production, and the UAE was the one that wanted to increase its production a lot and had the money and the ability and the resources to do so. Other members might talk about increasing production but could never manage it or don't have enough don't have the right oil reserves or whatever, right? Or political problems got in the way. So the UAE was the exception there. So the members who remain, we've got Saudi Arabia, which knows what it wants to do, and it'll be clearly the dominant leader of the group. and you've got others who, some theoretically might want to increase production, but haven't been very successful in doing so over the years. So there's kind of less. I'd say this does diminish those tensions.
You've noted that increased UAE supply. It could trigger a scramble for market share. It could create a domino effect. Plus, there's always as well the departure of the third largest producer as of right now. It deals a blow to OPEC's ability to maintain higher prices. So potentially lower global prices. And it'll mean that the UAE can increase output to boost supply when necessary. That's a much stronger position, obviously.
It's a stronger position for the UAE to be able to have an independent policy. Yeah. We're obviously in unusual times right now, and what will happen when the conflict ends and when normal oil transit through the Gulf resumes. There's a big gap in the market because of all the interruption that we've had over the past couple of months. So OPEC anyway would have to make a decision. We'll have to make a decision. Do they go for much higher production for a while to try to fill in that gap? Do they have restraints but maybe keep prices higher for a longer time? We'll see what OPEC decides to do. But at least the UAE has the flexibility to try to fill that gap if it wishes, and we'll see indeed whether the UAE goes for its full production capacity or still has some measure of restraint.
UAE's been very clear, pledging to be a responsible and a reliable partner. So this is a very forward-looking move, isn't it? It certainly represents a desire for greater national sovereignty over energy policy. Can I ask you just one final question? And it's your view. What it means for prices once the Strait of Hormuz reopens, and also how will the market adjust to and absorb the UAE's eventual output surge?
Yeah, so nothing in this exit means that UAE can't still cooperate with OPEC. It can still talk to them and decide to restrain production or not as it wishes. So look, I think when the conflict ends, honestly, it's very cloudy what's going to happen. The market is in such a mess right now. It'll take a long time to get back to normal. And whatever OPEC decides to do and whatever the UAE decides to do will be part of that, but still pretty unclear. You'd expect, of course, yes, prices to normalize, stabilize, and then come down as oil production returns. But exactly how OPEC manages that and whether it still restrains production or whether it allows much higher production to recover from the crisis, that's still to be seen, I think. But yeah, it does. The UAE has that kind of flexibility to increase its own production and increase its market share, and I think that's an opportunity that it's very likely to take.
It's certainly historic news. It's a fundamental rewrite of the playbook on Gulf energy dominance, that's for sure. Robin Mills is the CEO of Kamar Energy. Thank you for joining us, Robin. Always appreciate your time.
Likewise. Thank you.
Thank you very much. Robin Mills joining us at Mira Business FM. This is The Morning Drive.
Business FM. The sound of success.
On the morning drive, we're talking about oil and gas a great deal at the moment, but there is another liquid and powder moving through our oceans that's just as vital for us all, and that is fertilizer. Now, tensions around the Strait of Hormuz and the growing threat to fertilizer supply are raising fresh concerns for global food markets. Disruptions to transport routes and key agricultural inputs could put pressure on crop production, productivity, and ultimately food prices. And the United Nations is warning that these are building in terms of the risks with potential impact for both developing economies and major exporters. Joining us, Frida Youssef is the chief of the transport section at UN Trade and Development, UNCTAD, and is here to unpack what this means for global trade, food security, and how the UN as well is responding. Frida, you're very welcome. It's good of you to join us today.
Good morning, and thank you for inviting me.
First of all, this is a situation affecting nearly a third of the world's traded fertilizer supply. Could you put into perspective just how serious the situation is at the Strait of Hormuz and the implications for fertilizer supply, first of all?
So when you have one of the most critical choke point for energy supply and all related commodities such as fertilizer coming to a halt, close to a halt, it has a serious impact. The disruption that we are witnessing across the Hormuz Strait is starting to having an impact on not only the energy but also fertilizers, and which in turn will have repercussion on food production and food supply. And why so? Like you rightly said, 1/3 of the global fertilizer seaborne trade is carried through the Hormuz. So any disruption at this level would have, again, repercussion, like I said, on the food supply. And what we have been witnessing over the past, since the start of the crisis, a sharp drop in transit through the Hormuz from, an average of about 130 transit per day. That was during the period of 1st to 27 February, we're seeing now around maybe a single digit, like maybe 6 to 7 vessels per day. And this has, like I said, serious repercussion on the supply of fertilizers, as well as on gas and oil, and gas being an important material input to also produce fertilizer.
Frida, how quickly could this start affecting agricultural production and yields?
Yes. So what we're seeing now is really the impact is really happening at the price of fertilizer. We've seen an increase of 20%, for example, 20 to 30% in the price of urea. So what does it mean? This means that the farmers are being impacted with this increase in cost of fertilizer, as well as availability of fertilizers. And this decision, this issue will impact their decision in terms of plantation. And this is now the season for planting, more specifically in the northern hemisphere part. So when you have a decision taken today in terms of how much you're going to be able to use in terms of fertilizers, or whether you would decide to switch to crops that are less intensive or less reliable on fertilizer, this will have an impact on the production in the coming months when the crops will start to be harvested. So the immediate impact is an impact on price and availability of fertilizer, which in turn will have an impact on the decision for harvesting, but the production will see it in the coming months with the harvest of crops.
What does it mean for global food prices in the near term?
In terms of food prices in the near term, where we're already witnessing an increase in inflationary price, are going up, and this will lead to increase in inflation, not necessarily in shortage, but really inflationary risk, and this will, would have repercussion again on the food production, food supply, and consumer price ultimately.
Which regions are most exposed to the risks that we're seeing right now?
Now, in terms of regions, for example, I would say Asia is one of the most region that is being affected because of their reliance on energy supply from the Gulf. Almost 85% of their supply, is Asia, as well as the fertilizers import. Now, you have also countries that are highly also dependent on fertilizer imports, specifically from the region. We have, for example, Sudan, Australia, Tanzania, Kenya, Mozambique. All these countries are really heavily reliant on the fertilizer import from the Gulf, and some countries have limited capacity to diversify or also to rely on increased fertilizer production at the national level. Africa also would be one of the region that would be affected because of the large agriculture sector.
How are shipping and logistical challenges compounding the problem?
Logistic and shipping, they're key component of supply chain, and the sector is being disrupted first by, of course, the fuel price, as we have seen. Energy price have increased, and the fuel price, bunker fuel price for vessels has been increasing, more than doubling. So this is already an increase in the operational cost of shipping. You have also war premium that have witnessed a surge in cost. We've seen it going quadrupling and even going by tenfold. So this is really has an important impact on the cost of shipping as well as on the availability of shipping. The vessels are not also available, and this is creating an increase in freight rates. So you have an increase in freight rates, you have an increase in operational costs with fuel and insurance war premium, as well as the impact on, for example.
Good afternoon, it's 12 p.m. and this is the news on Mira Business FM. These are the headlines. The Central Bank of the UAE has kept its base rate unchanged at 3.65%. This decision follows a similar move by the U.S. Federal Reserve. The rate for short-term borrowing remains 50 basis points above the base rate. Officials say that the base rate reflects overall monetary policy, and it also guides the overnight market interest rates in the UAE. Gold prices are holding near one-month low as the pressure is coming from rising oil prices and the ongoing U.S.-Iran tensions. The higher crude costs are pushing up inflation expectations, and this is also shaping how investors view safe haven assets. Gold is under pressure as central banks keep interest rates high, and the higher rates make non-yielding assets less attractive. Brent crude oil has also been rising. This is increasing production and transport costs across the economy. U.S. President Donald Trump is stepping up pressure on Germany over its stance on Iran. At the same time, Russian President Vladimir Putin is calling for restraint in talks with Washington. The U.S. is now considering extending the blockade of Iranian ports, and this comes as tensions remain elevated. The conflict is estimated to have cost nearly $25 billion so far. That's the news for now. Follow more news on our website, mirabusiness.fm.
This is Mira Business FM. This is the Morning Drive. Coming up, we're talking real estate and how Dubai real estate is defying uncertainty. That is our topic of conversation next at Mira Business FM.
Mira Business FM, Dubai's home of business radio.
It's Mira Business FM. This is the morning drive. Now, Dubai's real estate market is pushing ahead despite global uncertainty, the mood of the last couple of months or so. Strong demand, steady expansion across the sector. So what we wanted to do is have a look at how developers are sustaining growth in the current climate. Omar Gul is the managing director at Mira Developments, joins us this morning. Good to see you. Good to meet you.
Morning. Pleasure.
Good to have you here, Omar.
Good to be here.
It's been an interesting time, huh? The last
Very interesting.
couple of months or so. What an understatement that is. Global headlines are kind of focusing on interest rate volatility, geopolitical shifts. Yeah, Dubai, or I suppose the UAE really, the real estate sector continues to report record-breaking absorption rates. We've got some record-breaking sales over the last few weeks that we've seen. Let me ask you a broad question to start with. What's driving the current momentum? And let's look at Dubai specifically. What's driving the current momentum in Dubai's real estate market right now, do you think?
In general, it's been the same principles. Dubai has been a safe haven. It's proven over the last 6 weeks that it is a safe haven. Even at the times when there's a conflict right at the doorstep, we all had a great life here. We could still go to work. We could still go to our offices. We could still go to restaurants to eat. We were not sitting at home. Dubai had a normal life going on. There was a travel disturbance that occurred. Tourism reduced, but nothing other than that. So Dubai has always been, so a lot of people thought that there may be deals in the market, but they didn't get any deals in the market.
Yeah, we've heard that. I mean, anecdotally, you hear that, but it's. I think a lot of that is taken out of context. When you consider the global macro outlook, inflation, higher borrowing costs, the Dubai cranes haven't stopped. That's as much as I can see, and that's a pretty good indicator. From your desk at Mira Developments, are you seeing a cautious market, or do you see the appetite for Dubai real estate fundamentally kind of decoupled from global headlines?
See, Dubai has never been a financing dependent market. In order to launch a project in Dubai, you have to buy land, you have to fund the escrow, you have to launch the project. So almost 40 to 50% of the project cost has to be put into the project right before it launches.
Yes.
And off-plan projects aren't financed by banks. They stay away from this.
Yeah.
So we've never been interest rate dependent. It's always been own equity dependent. So interest rate fluctuations, which you mentioned, do not really hamper Dubai real estate. And off-plan, again, even the buyer doesn't get mortgage. There is seller financing. We do give creative payment plans so that the seller is able to pay us in 3 years, 5 years, 7 years, and is able to do it at ease without putting a large sum of money in one go. So we haven't been really mortgage dependent market. Our secondary sale last year was 26%, out of which 60% was financed. So in the overall market size, 10 to 15% is finance dependent and 85% is self-financed. So that would never affect us, maybe sometimes in the late future, but not anytime soon. Developers here have good, because of the way regulators have structured it, they have good financial health. Nobody, unlike in the past, in 2008, a lot of developers kind of left their projects undone and left. Now you can't afford to do that because you fully paid the land, it's not leveraged, you have a sizable amount of money within the escrow accounts. And then if you've done sales, that money is also into the escrow. So you might as well just finish the building, even if you can't sell. So for us now, we don't see a worry of any developer not completing the project. Unless somebody engages in a mall practice, it's less likely to happen.
Okay. I mean, you're much more positive, or you seem very positive. There's no sugarcoating, though, that it's been a tough last couple of months. It's been certainly an uncertain last couple of months. How do developers manage growth in a time of economic uncertainty?
See, in such times, we don't honestly think about growth. We think about stability. And because of where we are and how Dubai has been in the past and how it's bounced back from every issue that has happened within Dubai or geopolitically, like Corona or a war in the neighboring country, Dubai has always bounced back. That's why usually people say a conflict benefits Dubai, but it's not because there's some strategic advantage Dubai has as a geography. It's because it keeps overperforming, over-delivering. It's provided home to 200 nationalities. Half of them come from conflicted or underdeveloped countries. They are living great life here. That's what gives Dubai the ability to bounce back. So right now, the last few weeks, we were looking at stability. But us as Mira Developments, we have about 70 billion dirhams of pipeline within UAE. So we are heavily invested into this country, into its market, and we believe in UAE, and that's why our investment is so heavy into this market. Our exposure is so heavy.
Okay. Let me ask you specifically about segments. Where are you seeing the strongest demand across the different property segments here in the Emirates?
So the mid segment has been a little oversupplied. Extremely low cost housing. We don't have affordable housing here, but the low cost housing is not stressed. Luxury is not stressed. So the mid segment housing, which is between, let's say, 1.5 to 4 million dirhams, a lot of private developers came, and that particular segment is the category where we have the most amount of supply in. So that may face stress. So far, it hasn't. We really haven't seen. We've seen some deals 4-5% below the trading price, but that was panic selling. We haven't seen actual Dubai prices go down yet. And I don't think they would, because I've seen that the last few transactions that I saw happening. Secondary is a good indicator of what's truly happening, because in off-plan, some developer needs some cash. They may do few transactions at a lower value at a certain point. So off-plan misleads us if we check transaction by transaction. Secondary remains the true market. So in secondary market, we haven't seen price reduction at all.
I mean, a lot of people, the kind of perceived wisdom was that this year, I mean, in rentals, certainly at least, we were going to see not a correction, but a stabilization, if you like.
Not this year, probably because in theory, there were 77,000 units to be delivered last year, but the number of units delivered were 33,000. So there's been a delay in delivery. So it would have happened next year. So if we go basically by the demand, supply, and economic analysis, rents would have stabilized, prices would have continued growing. Maybe not at the same pace it was, but prices would continue growing and rent would stabilize. We would see the same trend irrespective of the geopolitical situation. It is bound to happen because we sold about 200,000 units over 2 years, which are going to get delivered in the next 3 to 4 years. Unless population increase matches the supply that's coming in, which so far it is, we wouldn't see any problem in the selling prices. But rentals would stabilize. They wouldn't shoot so high.
Okay. What about in terms of buyer behavior? How have you, I mean, you're in this market, this is your day-to-day. How are you seeing buyer behavior evolving?
We certainly have a lot of fence-sitters right now who are just waiting to see what would happen. So the mid-segment buyer is always the most cautious buyer. The entry-level buyer doesn't have too many options, and he knows it's not going to go anything below this. And the luxury buyer doesn't usually care. They usually want the best unit, even if they end up paying a 10 to 15% premium for that. They want what they want. So the mid-segment buyer is the most cautious buyer. So that buyer is right now, they're fence-sitting, they're waiting to see how things unfold. But over the last 10 days, we've seen increased activity. Our sales numbers are back to about 60 to 70% of where we were. So I see it in a continuous improving cycle. By Q4, we should be back to early Q1 numbers.
Okay, so you're certainly seeing signs of encouragement. What about international investment? Is there an increased role that international investments playing, do you think?
It's always played. A lot of Dubai has depended on a lot of people from different countries coming to Dubai and buying real estate in order to rent it because of good yield or to use it as a holiday home, short-term rentals, etc. So those buyers are still gonna be there. Now we are back to 85% of the flights. It's just a matter of 15%. We do have summer coming in, which has historically always been slower because tourism drops. Even the residents start moving out of the country, they go on vacations. So we would see the impact in late Q3, early Q4.
We could see a different summer this year. I mean, it's so uncertain. We don't know. We don't know what's going to happen. But I think that's an interesting point. That's a fair point to make. Can I ask you a little bit about financing? Banks are, I guess, tighter than they were a couple of years ago. What do you do when it comes to navigating the financial landscape for your buyers, people that are using financing? Are you seeing more self-finance buyers? Is the level the same, or are mortgage products helping to keep the market moving?
Mortgage doesn't impact a developer here because it only works in the secondary market.
Really not at all?
Really not at all. Sometimes, however, if we see a particular product category which a mortgage buyer would buy, we give a payment plan which is backloaded, like 60% on handover, 50% on handover. So the handover installment can be mortgaged. But the first portion pre-handover has to be self-financed. There are developers in Dubai, we don't do that here, but some of the developers do a 20-80 payment plan or a 25-75 payment plan. So the last portion can always be mortgaged because the unit is ready. So we create, again, it's a seller financing in a way which enables even the mortgage buyer to get a bit of off-plan real estate, which otherwise he couldn't in other parts of the world where 70 to 80% is collected during construction.
Okay. Let me ask you about design a little bit. I mean, you're not just selling concrete, you're selling a lifestyle, aren't you, in this business? How does your design approach at Mira, has it changed at all in uncertain times, or has the impact of this changed the way you look at design?
No, it's too soon. We don't, in real estate industry, we don't pivot in a month. In service industries, I understand, and technology maybe. But in real estate, the house is a house. Like, one bedroom has a bedroom and a living room and a kitchen and a bathroom. That doesn't change much. What changes is the specifications of the flooring, the material. At Mira Developments, we only do branded real estate. All of what we do comes fully furnished, fitted. So because of that, we have remained in the category of upper premium to luxury. We've never done anything even in mid-segment, and we'll continue doing the same.
Okay.
That's the category we want to be in.
Sure. No, I mean, we're in the Art of Living Mall, and, I spend some time in the atrium downstairs where lots of the launches are done. So I've seen the models. I was going to ask you a little bit about product launches, the latest launches, and also say to you, what sets them apart, do you think?
In general, many things. For example, the clear ceiling height in Dubai is about 2.7 meters for majority of the buildings. We are at 3.5 meters. We are vertically integrated, so our contracting is our own, 50% Southeast Asian labor and 50% Turkic origin. So Uzbek, Turkish, who are known to have better attention to detail while doing the finishing of the product. Okay. We are backward integrated in terms of joinery, kitchen, linen. So a lot of things we do in-house, we control the entire life cycle. We also now are doing glass and aluminium in-house. We're not third-party dependent. We are not a lot logistic dependent. We manage our own logistics. 80% of what we do is our own. We just do not have cement and concrete yet, which we are soon planning to have a cement factory and a steel factory as well. Okay. Cement and steel, I meant.
Okay.
So in terms of specification, we have like Trussardi one. The show unit is here. You can see it. Frameless doors, extremely high ceiling, actual Trussardi furniture made in Italy, which is very expensive. Somebody buys it off the rack. The house comes fully fitted. The lobby is a double, triple height lobby. You feel like you're entering a 5-star hotel. Normally, this product category was, the macro markets that we are doing it did not have this product category at all. We could see similar product category in Palm, but again, they cut corners. And most importantly, what we do is we give a 5-year warranty. On our loose furniture, there's a 3-year warranty, and on anything that we do, which is hard-fitted from MEP to electrical to joinery to paint to doors to faucets, everything comes with a 5-year warranty.
What do you call the category that you're in?
We are creating a new category for ourselves. We don't compete with anyone. We have realized that there's a need for a particular product kind. We can't say we are luxury category because luxury in Dubai is defined only by the location. It's not defined by a product.
Right.
We are very product-centric organization. We spend so much time on the product. I have worked across large organizations in my career, and I've never seen such product obsession as lies in the DNA of Mira developments. So we constantly strive to keep improving. For example, our last launch, we pre-launched it. We'll be launching it in probably 2 weeks. John Richmond. It has a mashrabiyah, but it has a fully openable mashrabiyah. So you do have the feeling of full floor to ceiling glass. Right. But when there's sun, you can actually just put that on and you don't get sunlight inside. So during the day, it cuts the light. So which it had always traditionally been used in UAE. But nowadays, nobody uses because everybody likes even the open view, the open balcony, the full glass. So we somehow hybrid both. We mixed it up. So it has a mashrabiyah, which is very modern, very cool looking. Because the brand is John Richmond, it has its typical pattern of John Richmond on it. And then it opens and it's like a full floor to ceiling glass, open view, and it's a fully contractable one. So not even a part of mashrabiyah remains open. It just contracts with the wall.
That's very
So that's the amount of effort we put in to design the building. And there's nothing like this in Dubai. Absolutely nothing like this in Dubai.
I'm trying to imagine it, and I can't think of a comparison to make.
There isn't.
To be honest with you.
You would see a lot of mansions have those glass doors which contract fully, where you
like
walk from the living room to the garden.
Yeah.
A lot of mansions have it. No retail units sold, retail villas sold have it. They have the sliding doors. They don't have the contractable doors.
Yeah.
So other than that, it doesn't exist in the architecture much.
And that's a point of difference, isn't it? I mean, how much of the success of Mira, do you think, is the ability to use data to have the right location rather than just building where everybody else is building?
See, with the right location, there's always a location to price trade-off. Every location is the right location at a certain price, and any best location at a certain price level may not remain a good location for us. We're extremely data-centric from the kind of team we have. We analyze everything before making a business decision, but we are also a very gut-dependent business. We have a heart, we have a soul. So sometimes we just want to do something. Then we do not always stick to data, but data remains at the forefront of our judgment.
Okay.
But so does heart.
How has that manifested itself, the heart idea, in terms of a particular development?
You know, let me talk about our second development when we did Bentley Villas.
Right.
Bentley Villa, every villa there is 4-meter slab, 3.5-meter clear height. Bentley basement is 4.5-meter clear. Bentley first floor, second floor, all are 4.5-meter clear height. So it's actually 1.5 floor per floor.
Okay.
And then the Bentley furniture, which is already very expensive. Then the architectural style is very upspec'd and is again very expensive. And the house comes fitted with everything from mattresses to bed linen to cutlery to electronics. Like you just need to walk in with your suitcase. And we were the only ones who did, they were the small cluster plots sold. We were the only ones who even did a clubhouse within the cluster. Let go of place for one of the villas, but we thought, okay, we need to do that. So, but we sold at a 50% premium to any of our neighbors. And we are sold out. Some of them are still selling. Some of them still have stock available. So 50% premium. So market did understand what we were trying to do, what we were trying to offer. So it came, it was a bold move, which our CEO that time decided to take. But market did understand and they did appreciate it. And now that the product, almost the structure is ready and I see it coming to life, it looks stunning.
I mean, it makes a statement, doesn't it?
Yeah.
Yeah. Let's look beyond the UAE. I mean, I know there have been launches. There was a big launch in Georgia fairly recently, the last few months. I know there's the development between Abu Dhabi and Dubai. But I'm interested internationally because that's drawing some attention, I think. What's driving the international strategy?
We always had this strategy. We want to be, we have a Our CEO has a goal book where he wants to be in 60 countries. So we are just in 5 so far.
It's got some work to do.
So it's a lot of work to do. So a lot of sleepless nights and a lot of weekends where we keep working, and even that's not enough. So right now we are in Georgia, we are in Oman, we just signed Uzbekistan, we are in Switzerland, and then we are here. So we are very close to do something in Egypt and Maldives. So we are continuously expanding, and that's always been, ever since we started the organization, that's been the goal, that's been the aim. And that's what we are following. So we want to stick to markets which are very similar in dynamics. Multicultural, a lot of tourism, a lot of lifestyle product necessity or requirement. So Georgia replicates Dubai, for example. It's pretty similar to Dubai. 40 daily direct flights, tourism dependent, foreign buyer dependent market. Low taxes or no taxes, like the tax on rental is 5%, capital appreciation is 1%, I think. So it's an easy market to enter for foreigners. Oman is also very similar to Dubai, and we are in Salalah, which during the summers is at a 26 to 30 degrees temperature, just an hour's flight from here. So that's a very unique geography where we are, and we are increasing our land portfolio in Salalah. Switzerland, we are again at a tourist location. It's a ski destination. We're doing a hotel and hotel residences designed by Ali Saab. And so we'll continue doing this, but the ethos would be the same. We will be in the cities that are tourism dependent, which are tourist markets, I would say, in general.
Okay. So 60 countries, there's a lot of work to come. We've kind of laughed about it, but you did mention sleepless nights there, so I understand that. But what challenges have emerged for you? What are you facing? Beneath the surface of this kind of, it's a strong market performance. Mira is doing well, I understand that. But what are the challenges that you face day to day?
See, if your goal isn't big enough and people aren't laughing at that goal, that means you haven't set the right goal. There's some quote around it, which I don't remember, which means something.
You need kind of a 60. Yeah.
So, if people are not laughing at you and they don't think it's bizarre, then it's not a goal. Then it's just, okay, I'm going to do this. There's nothing really ambitious about it.
That's fair.
So it's an ambitious goal, and let's see where Allah takes us. Even if we reach 50% of it, it will be still more than any developer has done. So,
well, 50% would be 30 with the 5 now. So that's, I can't even work. That's like 600%.
No developer has expanded so much. It's a very regional business. Not many people are able to expand in a multinational level. A lot of funds and hospitality brands have, but residential real estate brands haven't really been able to do that in the past.
Okay. What kind of signals do you watch in the market when it comes to deciding where you're going to head next? What do you look for?
We already have a map, but it's mostly dependent on where, again, like I said, it's very tourism dependent markets where the domestic demand may be low or high, but the international demand should always be high.
Okay. Final question for you. I know you're busy. We've taken a lot of your time. I appreciate you being here as well. The real estate market isn't about hype. It's about delivery.
Yep.
Right. That's the key. If you can prove the value of your asset through design, through location, the vision, the goal, the aim, even if it is a dream, but that. Does that mitigate kind of the global uncertainty to extent that we're seeing, do you think? The fact that you have this, I don't want to say dreams, that seems a bit unfair, but you've got this place that you want to reach?
Yeah. See, of course, geopolitical scenario impacts. We cannot say it doesn't impact. There could be scenarios in certain countries, like we've seen in the past in Syria, there could be no real estate development in Syria in the past. Now they're back on track. So they do impact. I cannot say they do not impact. But if your product is good, it takes a lot of impact away. So there will always be steady demand for something that's good, unless some geography becomes barren. As long as people are living there, life is going on there. If your product is good compared to the market, it will always have more demand.
Your view isn't just apartments, is it? Your view is more equity in a city or in a country.
Absolutely. That's how we look at our business.
Yeah. It's been good to talk to you. I appreciate you coming in. Omogul is the Managing Director at Mira Developments. Thank you for joining us.
It's been my pleasure. Thank you so much.
Thank you. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.